All right, everything looking good. We are live. Somebody let me know in the chat. We're coming through loud and clear. Go ahead and get this stream started. Welcome back to the channel, Crypto Trend Hater, with another Sunday morning market look ahead. It is 8 p.m. Eastern Standard Time on 8/28/2022. And of course, as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so obviously got a little bit of volatility after literally nothing happened all weekend long. We've got a little volatility in crypto. No surprise, as statistically speaking, as we discussed on Friday, essentially when we close the week at the bottom, essentially get no buying pressure coming in at the end of the day on the stock markets, futures, etc. We would expect that we will see continuation. I say it all the time, but just to reiterate, we didn't run out of sellers. We ran out of time. So you would expect when the markets reopen for the downtrend to resume or the selling to resume. Essentially, that's what we're seeing right now in crypto. And it's what I would expect to continue seeing on the stock market as well. So that being said, we could go ahead and start with crypto and just kind of take a look there. So we'll go ahead and jump right in with the old crypto coins. So here we have Bitcoin on the daily. This is our Bitstamp chart. And essentially, we're just seeing the move play out exactly as expected, as predicted, discussed, whatever you want to call it. So essentially, all we're looking at is we have this channel. A lot of people drew it a lot of different ways. Obviously, they were all wrong. This is the way the channel should have been drawn. It's very, very clear, obviously, because the moment we break down from the channel, we get this big, thick red candle straight in the bull's backside, and the bears basically resume control. At which point in time, we attempt to move back up here and hold support, which we do, but we essentially trade in this super tight range. It is tight like a tiger. At which point in time, we eventually lose that range and continue to move down. And at this point in time, we have the measure move from the breakdown of the channel. And obviously, the majority of that measure move has been completed. So do we hold on and wait for that last little bit of the measure move? Do we just assume it's completed now? Close shorts, take profits, etc. That's obviously up to you. It's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. But the most important thing is not any of that stuff that we discussed already. None of that is important. What is important is this one single level. Ooh, that might not actually be better because I think my picture might block it. So, that'll be okay. So here we have at the bottom our lowest low based on daily candle closes at 18,919 or somewhere close to that. So let's say 18,920. And we're currently at 19,610. And obviously we had a nice little sell-off to close out our weekly chart on spot markets. So the fact that we closed here tells us that if we close a daily below that, we will have a new cycle low daily close, which is obviously extremely, extremely weak. Now, so far, I'm going to give a bull case and I'm going to give a bear case. So the bull case is we don't close below that, and then we find support and then move back to the upside. So if that was going to be the case, if Bitcoin bulls still existed, if they still had any capital left to deploy, if they hadn't been completely capitulated, completely just taken to the ringers, and they were able to borrow some more money from their mothers or from a bank that gives crypto loans or whatever the situation. Oh, whoops, that's already on here. Let me just get rid of that one. Let's just pretend that somehow the crypto bulls were able to deploy more capital into the space, not just say how bullish they were and the bottom is in, but not actually take any action, which is clearly what's going on right now. Everyone is calling for the bottom for like the 13th time this cycle. The bottom was in at 60K. It would never go lower. Then the bottom was in at 50, then 38, then 30, then 28, then 22, and then it was in at 16 or 17 whenever it hit, and now the bottom's in again, obviously. So, you know, until it's not. So if we go from the bottom right here, though, to the top of the range right there, just with our fib from that cycle low, we see over here on the right that we were holding on to the 0.5, and we lost that 0.5. We shot straight through the 618, and now, you know, the last remaining target that matters is 786. You know, if we go deeper than 786, the probability of that being a bottom and not putting in a new low goes to like less than 12%. So it's extremely, extremely low. So if we take out that level, that whatever we said, 19,000, 18,900, and let's just say 50 for simplicity. If we close lower than these two candles, or this close and that open, you know, at that point in time, it's a new low. So it makes sense that we're just going to continue seeing new lows until we don't. So the hope for the bulls has gone from, you know, a respectable percentage to near zero. It's a very, very near zero at this point in time. So now, that's obviously the bull case, is that we hold support right there, and that actually we find support at the 786. And then the real bull case is that we essentially take another leg higher. Now, does that mean that we just go back into like a macro bull run? No, not at all. Let's just say we move down here, we bottom, and then we start moving to the upside. It's actually possible we come up here and put in a new high. You know, and where would that high take us to? The back test of the 200 exponential and simple, likely somewhere around, you know, 28K or something like that, depending on how long it takes to get there. You know, if we just go like straight up immediately right now in a single candle, maybe 30, 31K. If it takes a little time to get there, you know, probably something closer to a 28 or so. So that's our bull case. And I know what you're thinking right now. You're thinking, well, that's not very bullish. This asset class, this chart, it looks like trash. Which I would say I agree with you. I completely agree with you. But there's no surprise, obviously. And then here's the bear case, or the base case, the same one that we've had for like literally months, which is, I mean, let's be real right now. I don't want to float my own boat here, but, you know, it's playing out perfectly. So I guess we'll just stick with that base case, which is that 5-wave structure to the downside is about to resume. Now, again, it doesn't mean it's not possible, because let's look right here just for a little perspective of the potential bull case. Before we get too bullish and people capitulate after the move has already taken place and you start selling off, and then all of a sudden it rockets to the upside and you get chopped up like a chump. This was the bottom right here at 33K roughly on after that first flagpole down, and we started forming a bear flag. Well, we moved up here, shot to the upside, and then we're going to fib from the bottom to the top right there from that February low and high right there. And when we came back down, we actually shot through the 786 on that big wick, and then we started moving back to the upside and eventually put in a higher low, or I'm sorry, a higher high. Well, both a higher low and a higher high. And we back tested the 200 exponential and simple. So there is a legitimate viable case to be made for the bull case that it does in fact come up here and put in a higher high. Now, after that, does it just roll back over and go to a new low? Probably. But it's worth paying attention to. Now, the most important thing we saw right here that we don't see currently but could is a big rejection of lower prices. And when I say a rejection of lower prices, I mean a big wick at the bottom of the candle. So we essentially sell off violently, hit a bunch of stop losses, and then, you know, bots, algos, whales, buy up all that price action. And then we actually close green and then see that continuation to the upside. Same thing happens right here. We sell off, we see an aggressive candle, big volume behind it, and then it gets bought up. Now, when we see the big volume spikes, those are important for many reasons, but oftentimes the reason a big volume spike occurs is because there's not just selling and there's not just buying. There's a battle taking place, buying and selling. And that's why when we see those rejections, or, you know, a rejection of higher prices or lower prices, is so important, because essentially what it's saying is, hey, you know, we can't predict the future. We don't know who's going to win, but right now there's a battle going on. You know, there's one of those like epic arm wrestling matches going on where, you know, two guys or two ladies are, you know, arm wrestling, and you're not sure, is one of them going to win? Is an arm going to snap? Is somebody going to pass out from holding their breath? We don't know, but there's some action going on. And that's essentially what these candles are, is there's buying and selling going on. There's a battle going on, and whoever wins that battle is going to, you know, be the new champion and get some continuation. So in this case, a continuation to the upside, because we reject lower prices, and we do not close below the 786. We close right at 618, but we see a wick that goes almost down to a new low. So that would be essentially the bull case potential scenario of what could happen Now, again, I don't want to get overly bullish here by any means, because obviously you guys know I'm a bear. When the markets look like trash, you know, I'm going to take the trash out. And obviously the markets look like trash. So that being said, we see essentially there is a possibility where we actually, I mean, we've already closed lower than the 618, so it wouldn't be the exact same scenario. But there is a situation, you know, potentially where we get a wick down here, we put in a higher low based on wicks, and then we go to a new all-time high. There is a situation for that. Now, is that likely, especially when we have a textbook bear flag going on here? Not really, not really. And I know what you're thinking. Well, everybody sees the bear flag, so wouldn't it make sense for them to break down from the bear flag and then move the price back up so that there's maximum pain? Sure, maybe. Maybe it's possible, I guess, but I don't know. I mean, that seems like a little bit conspiracy-esque. So anyway, let's resume to what's actually happening or likely to happen or been happening, or, you know, our base case from months now, which was this 5-wave structure to the downside. So we have our wave 1, we have our 2 correction, we have our 3 down, we have our 4 correction. So then again, just like we discussed previously, if we go from our high right here, and then we take it down to our low, which is a cycle low, we came up and almost got to the 382. Not quite. I would have preferred a clean test of the 382 and then continuation. But it's possible this is the front run, and the bulls are just dead. There's just no bulls left. And the people that are bulls are only pretending to be bulls because they're already all in. Because the difference between somebody being bullish and the markets being bullish is whether or not there's buying pressure coming in. And obviously right now, there's no buying pressure coming in. I mean, it's in the vested interest of anyone that owns Bitcoin, crypto, anything, to not have the price go below the previous low. Because any hope that there was that the bottom is in is obviously gone the moment we put in a new low. And we're literally pennies away from that. I mean, maybe not literally. We're figuratively pennies away from that. Literally dollars away from that. So to me, this doesn't look any different than what we expected. It's basically just the market doing what we've been saying it was going to do. So that being said, you know, we discussed these potential downside targets and, you know, why we picked them out, what we would expect, how it would look in real time, essentially, if we hit those. So we had the 1.618 from this most recent leg up right here. And that is just below the 0.5 on the macro. And that is at 13,973. And in between that 13,973 and, you know, basically 15,000, 14.9 is that 0.5. That 0.5 being all the way from this entire bull run, the low. So this is our like $3,000 low from December of 2018. Now it is important also, while we're looking at that we go ahead and fib from this other significant swing. That significant swing being the Rona dump. So I know it's like a black swan event and there was no way anyone could predict it, etc. But it doesn't matter. It's still worth paying attention to because a lot of bots and algos are going to use the most recent swing. So they're going to use a very clear swing high or low, even if it's not the macro highest high or lowest low. And that's why when we take these swings and we're looking for targets to the downside, we often will look at, if this is our low, we'll look at the most recent clear swing, we'll look at the swing before that, and then we'll look at the all-time high, and then we'll see which ones we're getting the most confluence out of from like actual price action. And then we can say, okay, this is what the bots are looking at, this is what the algos are looking at, so I'm going to look at it too. So if we just zoom back over here and take a look at take a look at what's taking place here, we can see the 236 in red that's not as thick. That is from the Rona low. The other one is from the cycle low, which is 3K Bitcoin. So what we see right here, you know, we basically bounce around in between those two 382s. And then if we go down a little lower and look at the 0.5, the 0.5 of the Rona low is 16,362. So what we don't want to happen is we don't want to come down here, hit that perfectly, and then not take any action because we're expecting price to go lower and then miss out on what could be a potential rally back to the upside. Now, is that going to happen? You know, it seems less important to me to look at that swing low versus the cycle low, but it's worth paying attention to. So in all reality, what is our like main area that we're watching? I mean, it's sort of like this whole brick in between the 1.618, the 0.5, and the other 0.5. So we're going to pay attention to those levels. Now, the next step down after that would obviously be our 618, our 618 cycle low, and then the 2.618. So again, we'll see if this starts to get clear reactions when we get down to it. But before we have to wait and see how that works out, we can just zoom up here and look, okay, did we see clear resistance or support at that 382 from the Rona low? Well, I would say right here, yeah, we see definitely like some little support right there. What about at the 236 over here? Okay, we see some kind of support through here. Do we see more or less support than the macro low? Not really. I mean, I'd say it's about the same. You know, we could go to a longer time frame and see, okay, is something clearly like showing up on the longer time frame that maybe we're not seeing on the shorter time frame that could give us a better idea? Because essentially what we're doing right now is detective work. We're trying to figure out, okay, which one is the market respecting more? So here we see clear resistance at the macro 382. Here we see some pretty clear resistance and support at the other 382. I would say they both matter right now. I can't see clearly one or the other. So naturally, I would give the bias to the actual cycle low. But there's no reason we don't just keep them both on here and continue to look at them. Let's go out to the monthly real quick. Just, you know, for the one click, it's worth just checking out. So again, here we don't see anything particularly one-sided that it's like, okay, this is clearly what everyone's looking at, and that's the only thing we're going to look at. All right, so that being said, we have those key levels in mind for potential continuation to the downside. We see what's going on. We know the key level, 18, you know, 930-ish or whatever. You know, we're literally a couple bucks off of it at this point in time, $700 off of it. So if you ask me right now, are we going to new lows? You know, I would say the same thing I've been saying. Let me shake my 8-ball and see. And you know what? I'm not even a bother. I don't want to waste its magical powers. I mean, we're going to new lows. But again, you know, we've been positioned for that forever. And, you know, we did get lucky on that 25,000 sell, obviously, selling like literally the absolute top. So are we going to get lucky on this next buy and buy the absolute bottom? Yeah, probably. We'll probably get lucky again. So what should we really be paying attention to? Is there another macro target to the downside that we could pay attention to? Well, obviously, you guys know, especially the group members, obviously, that, you know, prior to ever putting in the second high right here, actually after we put in that first high and we didn't get quite up to my target, the 1.618 of like the macro previous 20,000 high to the low, you guys know I was calling for a slightly higher high. And what that would actually be is, you know, an expanded flat, which is a complex, you know, essentially, it's a very complex, very abstract, very uncommon setup that happens. But when it does happen, the psychology behind it is what's extremely important, because basically everyone thinks, okay, the top is in. So now if we take out that top again, we would expect basically, you know, blue sky breakout continuation. And then what actually happens is, you know, and we saw it happen in real time. Obviously, we were ready for it ahead of time. As soon as we took out like that 64K level, you know, we shot up to almost 70K and everybody was calling for, you know, 100,000, 250,000. All of a sudden, all these targets come back up and everybody's super bullish again. But what's actually happening is, you know, basically people that were shorts, stop losses get taken out at the absolute high. And then those people are forced, they go from sellers to buyers, because as soon as we take out the previous all-time high, their stop loss gets hit on their short position. So it buys, closes out their position. So they are like essentially liquidity for market makers and like, you know, intelligent investors, savvy investors, etc. People like me who identify the pattern in advance and take advantage of it, etc. So that being said, that's the ultimate fake out. I mean, that is literally the worst case scenario. We basically get a breakout and then it fails, or a breakdown and then it fails, because a bunch of people end up buying or selling the absolute top, which is the worst case scenario. You're literally the worst investor ever if you get stopped out and then the price reverses. Not, you know, not by your own fault. You're just not sophisticated, which is okay because it happens all the time. I mean, that's why I literally don't like to buy and sell breakouts or breakdowns, because the probability of them actually playing out is like 50%. It's not some crazy statistic where it's like once you put in a new high, there's like a 90% chance you just rip. No, it's like 50-50 still. So it's not very good. You don't really have like a substantial advantage. So as we see essentially this expanded flat playing out, there's some important things to pay attention to. Like everything we do, you know, with a like, you know, quant analysis or rules-based system, etc., you know, we look for basically things that are going to reinforce or, you know, either our bullish views or our bearish views, or at least give us like an outside perspective. So what we're going to look at here is we have this peak right here to the trough right here, and then we obviously have the new higher peak right here. So if we take from our low right here and we draw it up to the top right there, and I'm just extending it out to the side right here so it shows up on the current price action, so it's just slightly more useful. And then if we just look down here at that 1.618, because it's the bottom to the top right here, a lot of times, now it doesn't have to be happen 100% of the time, but part of the rules for the expanded flat Elliott wave correction are essentially for the ABC expanded flat correction, which is what we have taking place right now. Let me actually put that on here so this all makes sense. The idea of this Elliott wave expanded flat is that we basically get an A down here and then a B up here to a new high. So rather than this actually being part of the impulse wave 5, it's actually the first part of the correction. And then the C itself continues to the downside. And then the rule for the actual C is that wave C tends towards the 1.62, 162%, or the 1.618 of the length of wave A. So, you know, essentially, technically, it would be from the top right here to the bottom. I've seen it done both ways, and I'm going to tell you the truth. Honestly, the rule is written technically that it should be the wave A, which is the initial peak to the bottom right here, but it's subjective because a lot of times you actually see that it plays out that it's actually the wave B of the 1.618. So we'll look at both. They're only a couple dollars off of each other, but essentially what it's saying is that 1.618 from the peak right here to the trough right here, from the trough to the peak rather, you know, that is obviously the one because it's just a double bottom. And then we see the continuation to the downside. So that 1.618 would actually be right around here at 16,700. Now this wick right here took us down to 17,500 roughly. So at that point in time, did it already play out? Is that the completion of, you know, the ABC correction for the expanded Elliott wave flat? It is possible. It is definitely possible. So let's move this over here and see, do we get a clearer picture if we go from, so here we have basically, let me just put it right here so it's a little clearer. We have like the rule stated from the bottom of, or top of the A to the bottom of the A. And then this would give us the 1.618 right here. And essentially when that 1.618 hit right there, it almost touched perfectly on the bottom. So 17,460. So based on the rule system, you could argue that we already hit the 1.618, which would give us the potential that actually like this ABC correction of the expanded Elliott wave flat has already completed. And we're actually headed to new highs. Now, obviously now, while we're looking at it in real time, the likelihood of that happening is trending towards zero very, very quickly because we're basically getting ready to potentially take out that low again. All right, so that's what we're looking at. That's our potential targets. You know, obviously we potentially already hit one target. That's why we arguably took a counter trend trade, you know, with Ethereum, Bitcoin, some of the other shit coins as well. Played out nicely. But we see it drastically underperformed traditional stock markets, and Bitcoin and many, many other cryptos drastically underperformed as well, with the exception of like Ethereum, Binance Coin, Matic, just a couple of the other like big ones. All right, so back to our rules here. So the flat correction wave can appear in any corrective position. So it could be essentially what that's saying is we could be in a bull market, we could get a correction, and then we could resume the bull market, or we could get a bull market. It could be distribution taking place, and then we actually like enter into the bear market, which is what seems most likely now based on obviously our 4-year halving cycle, and then, you know, what current price action is basically telling us. All right, and then just continuing on. So a flat correction wave will usually target the 50% retracement level of the previous move. So the 50% retracement level of the previous move in this case would be our entire bull run from, you know, the lows in 2019. Well, 2018. It's right around 2018, 2019. So we put in our lows around 3,000, and obviously we have our fib right here to the top of the price action right there. Let me make sure this is like actually accurate. Sometimes I get a little lazy with these targets. Okay, yeah, that's pretty good. So we can like look at this level a little more accuracy. So we know, again, we're going to look at those two levels, you know, essentially the low from the Rona dump, the Black Swan, versus the low from the cycle low. So if we look at our 0.5 over here, that's what we were just looking at earlier, which is essentially the 14,757 level all the way up to the potential of the 16,277 level. And then obviously we know the 1.618 as well, you know, which we just looked at, and the two levels of that. So we have quite a bit of confluence, essentially, right around this level. So you know what we should do? Let's go ahead and mix it up a little bit. And I'm actually going to put like a little yellow box right here. So when price action does get there, we're paying attention to it. We don't just like completely ignore it, expecting it to go lower, and then just, you know, slightly front runs our target because we got it just, you know, greedy by a couple bucks. So that would be essentially a retrace. The yellow would be if the market is looking at the 1.618 in from the Rona low, and then the green would be if the market is looking at somewhere in between the 1.618 from the cycle low and the, or I'm sorry, the 50% rather, and the 1.618 from this recent wave right here. So obviously the shorter the pattern is we're looking at, so in this case we have this tiny little fib right here, that's little, so it's much less important than say taking from the Rona dump to the all-time high, and then that is slightly less important than taking from the cycle low to the all-time high. So again, we know each thing, the longer time frame, the more it has been in effect, like, you know, Lindy effect style, the longer something has been, the longer it's likely to continue, or the more significant or substantial it is to our technical analysis. So what do we expect to happen from here? Well, it's the same thing we've been talking about for months. So I'm not going to go like overly into details on this right now, but obviously, you know, the more time has gone by, the more of a genius we have looked like, because the market has literally done exactly what we mapped out in advance. Now, again, I wish I could take credit for this, but this system is literally like hundreds and hundreds of years old. Like, I didn't just invent this. We basically just pieced together all of the best pieces of the system to create our own. But I mean, like anyone that is good at something, you didn't do it on your own. You know, a lot of times someone else put in all the work, and then that person is a goddamn hero because they took the time to write it into a book or share it with you or mentor you or, you know, carve it into a stone tablet, you know, for all the world to see into the future. So, you know, taking what has happened previously and then extrapolate that or modifying that or making it better, you know, is what essentially like human intuition or improvement, whatever you want to call it, is all about. So what we're looking at here is basically hundreds of years worth of effective methods refined into a combination of those things. I mean, they were using moving averages, you know, hundreds of years ago. They calculated by hand. They were using, you know, Charles Dow theory, you know, 100 years ago. Well, maybe not quite. You know, all these different things. Benjamin Graham, all these various situations, Fibonacci, you know, we're talking about stuff that goes back like hundreds and hundreds of years. You know, some of the methods that are used in technical analysis, you know, far date anyone that still walks this earth. So by taking all these different things and combining them, we're able to get a clear picture one way or the other. And at any point in time, like I always say about the choose your own adventures, the market can decide, okay, we're not doing that anymore. So that's why we have to be ready for it. And the key is that these pivot points that we're always talking about, you know, these SR points, like support resistance flips or pivot points in the market, or like, you know, key levels, whether it's a moving average, whether it's a Fibonacci level, etc. Those are the areas that it's like, okay, pull out the you know, magnifying glass and let's really watch this level, because this is likely an area where we're going to see a potential pivot. Now, if we're in a downtrend, could that pivot now be like, okay, now we're going to resume an uptrend? Or could the pivot be, okay, we're in a downtrend, and once we go below that, you know, we're going to take another move to the downside. So a pivot doesn't have to be a reversal necessarily, but it's a key level in the market that we're paying attention to. And oftentimes you'll see when we initially hit that level, we'll find support, say, from the top, and then we'll bounce, and then we'll come back down and break through it, and then we'll back test it. So it doesn't mean it literally has to hit that level and then reverse, or hit that level and then just go straight to zero. So let's just assume that we're right. I know. Probably not going to happen, but let's just assume for 1 minute that we're correct. And what's actually about to happen is we're going to come down slightly lower to either the yellow or the green box right here, the 0.5 of the entire structure, you know, from the downside all the way up, which essentially is the bottom of the 4 of our 5-wave structure. So again, we're just assuming right here, we're just hypothetically looking into the future to see what could happen. So in my opinion, what could happen right here is that we find this temporary bottom, you know, which does it seem likely that we come down here, get super, super close to the bottom, come back up, and then just go slightly lower, and then that's actually the completion of the 5 waves and it's done? You know, it's definitely a possibility. I would not put it out of the cards that that could happen, Because again, the same way when we take out the high right here and it tricks everybody and then they end up upside down in a position from the worst possible place, that's exactly what would happen right here. If we came down and put in a new low and we literally just went a couple dollars lower, let's say we went to 14,926, but previously the wick was 17,579. Sure, it's about 20% lower, which is a big deal. But I mean, think about that. All of a sudden we take out that low, everybody enters, you know, they go from basically being a bull and long and the bottom's in to all of a sudden getting stopped out, because as soon as we break to a new low, people say, oh, it's a new low, I want out of my long position, and then I'll just reassess into the future. So the same way, it's the worst possible place you could get long up here, and then you're made to look like an absolute fool because you blow out your account, lose all your money, and then, you know, I don't know, self-terminate, you know, whatever, just go into like a sad depression. I don't know. I can't imagine what it must feel like to be the person that bought either by choice or not by choice at 70,000. I'm sure it sucks really, really bad. That being said, imagine the exact same thing happens down here and we just break to a slightly lower low, you know, maybe 20%, maybe 10%, maybe 5%. And then all of a sudden you're taken out of your long position at the absolute worst possible time. And then we start grinding out, you know, pull back up and then start into the slow process of our next bull run over the next like 3 years or whatever. So that would be worst case scenario if you got stopped out right there, the same way it would be right here. So what is the likely scenario? What could happen? You know, what are we looking out for? How are we going to know? We have to just look at these key areas and see. Now, it makes much more sense to me that most likely what we do is, and we did this last time, is that we extrapolate out either the wave 1 or the wave 3, and then actually the 5 is the same one. So next what we do is look at the 5-wave structure and say, okay, so what are the rules for this 5-wave structure? Well, we know that if the wave 1, we already know the length of wave 1. If wave 3 is shorter than the wave 1, then we know wave 5 has to be shorter than wave 3, because 3 is often the longest, but it's never the shortest. But that's not the case. Wave 1 is actually shorter than wave 3 right now. So that means wave 5 can be any distance. It could be shorter than wave 1. It could be shorter than wave 3, but longer than wave 1. It could be longer than wave 1 and wave 3. We don't know. And frankly, we don't really care. It could be any of those things. So if we extrapolate out that move, you know, which again, we have done many, many times. If we just extrapolate out that wave 1 and say, okay, that is definitely the peak, or at least it sure as hell looks like it now, that takes us down, you know, right around there. And then if we just do the same thing and we say, okay, what if we get essentially the exact same wave for our wave 3, and then we just extrapolate that out, what does that look like? Again, assuming that is our peak right there, that essentially takes us down here. So now we're looking at a lower low than the 0.5, and we're actually looking at the 618. And again, we have these two 618 levels. So the same way we had the yellow box right here between the 2.5s, you know, we'll put in let's put in an orange box right here, so we just remember what's going on. And that'll be, you know, basically like the between the low from Rona 618 and the low from, you know, the cycle low 3000 618. So now we have two pretty key areas that take up the majority of the area that's below us. You know, there's basically an area that we're not paying attention to right in the middle. And then there's, you know, two pretty key areas. So at this point in time, when we get down to 14,000, between 14 and 16.5 is very important area. And then if we break down below that, then again, we're going to start looking at, you know, basically between the 2.618 at 9,575, the 618 and the other 618 at 11,552. Now, I know what you're thinking. So this area right here is 16% and it's $2,240. So does it matter? Let's just say we knew for sure, okay, 100% that we were either going to bottom at the 0.5 or we're going to bottom at the 618, but we don't know which one. Well, who would care then, right? It doesn't matter if we buy right here or buy right here if we know we're going to bottom right there. And if you're not sure, you know, do you just buy all right here so you make sure that you're positioned? Do you buy half here and half here? Do you buy 1/3 right here, 1/3 right here, 1/3 right here? You buy, you know, a third here and a third here, and then another third as we start gaining momentum to the upside? You know, we don't know. You can do it however you want. There's lots and lots of strategies out there, obviously. You know, I prefer to add into momentum or buy into strength. So you're not going to be buying into strength as we're continuing to go lower. But I think setting, you know, a key level that we're going to pay attention to potentially enter, you know, a quarter or a tenth or, you know, a third of our position, whatever, from is not a bad idea, especially if that ends up being the bottom. You look like a fucking genius. So that being said, we have some key areas to watch out for. Let's look at what if it's worse than that. because we looked at the possibility that, you know, things aren't as bad as we think. What makes this situation worse? Okay, well, if we look back, obviously we have, you know, our little, you know, whatever you want to call it, channel situation, whatever, that we drew here, you know, our version of the rainbow chart. We'd be breaking down out of that regardless of any of those bearish situations happen. So that's obviously not a good thing. That starts to like look pretty nasty. So if that happens, are we just going to break down from it and get like a Rona wick like this, pretty aggressive one, and then immediately reclaim those levels? You know, could that take us to our targets? It definitely could. So that would definitely be an area of interest to look at. What if things got nasty though? What if like this isn't actually like just that ABC, and realistically what we expect is a 1, a 2, a 3, a 4, and then we do actually get that 5 to play out? That's basically our ABC taking us down to either right here or right here. Or what if we just overshoot and it gets really nasty? Because actually like the market is following, you know, this pattern very, very nicely. But let's just say, for instance, you know, because of quantitative tightening and because of all the uncertainty in the world and the liquidity being sucked out of the system, that like actually we just kind of overshoot to the downside. Where would be key levels to pay attention to for that? Well, you know, obviously we have, again, our cycle low, we have our Rona low right here, and then we have our 786 levels right there. So what confluence do we get if we really zoom out and then we start looking at, you guys know my macro thesis obviously is that we actually, like, the whole crypto space is about to get decimated to the point where, you know, people actually capitulate. So essentially what happened is, you know, we're in a pretty aggressive correction and it's getting pretty nasty, and you know, people don't want to admit it, so they're still buying like trash coins. So what needs to happen, you know, is a washout. Like any bear market, the bottom can't be in until we run out of sellers. So if people aren't selling, they're just hodling, okay, then we'll just go lower until they do, because people will capitulate. Always. Always. So let's just say that is a situation. Everybody's levering up right here, expecting that there's no way price could go lower, and then we end up just doing something disgusting. What would that look like? Well, it would look like our 5-wave structure right here in blue essentially has completed, and now rather than correcting just from wave 4 to wave 5, or the Rona low to the top right here, which is what we've been talking about this whole time, instead we're actually going to correct from 0, Bitcoin's entire life cycle, the entire 5-wave structure to the upside. So where does that put us at? It puts us at the 236 here in red. And that level is 6,194. So actually what that would mean is that instead of just correcting wave 5, we're correcting the entire life cycle of Bitcoin. At which point in time, once we hit that level, we would expect a very, very strong reaction. And when in hindsight, you know, we love to look back at it, okay? We like to circle back. We like Jen Psaki it, okay? We actually have key important area. Now, obviously, in hindsight, we can look at that area. We didn't know this was going to be, 70,000 was going to be the absolute peak of the market. We didn't know that. But now when we're looking back at it, now that fib's in place, we see, okay, this 236 level is pretty fucking important. What was that? It was literally the bottom of the gigantic descending triangle that formed from the 2017-2018 peak in crypto, to which we capitulated another 15% from that level. So that's a 236. So if we get down there, obviously, we would expect support there regardless. Even if we didn't have this macro fib on, we would expect support because that was key support, you know, along the way previously. But the fact that we have that level of confluence tells us, wait a minute, we're probably onto something right here. And obviously no one else on earth is talking about this because everybody else is brain dead, brainwashed, or, you know, going along with the narrative. There was one man that mentioned this briefly after we did, but he walked it back because, well, he's a pussy. You know, once your channel is monetized and you're relying on a cult for, you know, monetary gains, there's no real incentive in actually doing technical analysis. The incentive actually is just making sure that your followers or your cult members are happy. So when you walk back key stuff like that, you know, and say, oh yeah, you were right, I don't know what I was thinking. Well, I mean, to me, you lose all credibility and you look like a little pussy bitch. But, you know, maybe you were just a pussy bitch the whole time and you were pretending. Maybe you just capitulated because you like taking people's money via views, monetization, whatever. I'm not going to fault you either way. I mean, let's be real. The entire crypto space is totally like sellouts. So everybody's shilling trash coins. Everybody's using affiliate links, whatever. So I'm not saying you can't ever trust anyone that uses affiliate links or takes sponsors or anything like that. But just know, you know, like the old saying goes, follow the money. So if someone is getting paid to shill for some trash or a good project, they're more likely to have, you you know, a natural monetary bias towards that product. So if I'm like, oh, BitConnect sponsored me, like naturally I'm probably going to say nicer things about BitConnect because they paid me money. If somebody's like, hey, what do you think about BitConnect? I'm like, oh, I don't really know a lot about them, but, you know, they paid me $30,000 to, like, give them a shout out. So, you know, they're all right, right? I mean, it's okay. I don't know anything about them as a project, but, you know, they give me 30K, so I kind of like them. You know, obviously they didn't give me 30K, but, you know, hypothetically speaking. So when you hear people talking about something and they've actually got paid for it, whether or not they disclose that or not, understand they have an incentive to speak favorably about a situation or whatever. So just understand, follow the money and see, you know, where people's motives might lie. So that being said, when we look at this 236 level, if we get down here, which we may not get down to 6K. I mean, it sounds crazy right now at 20K, but it sounds crazier at 70K. So at 70K, our target was 6K. And now that we're at 20K, it still sounds crazy, but it doesn't sound that crazy that we could go to 6K right now. You know, obviously we still have quite a few like slinky theory levels in the meantime, but let's just say we do get down there. Okay. No doubt, for sure. The same way everybody got extremely bullish at 70K and was made to look like fucking fools. And then they got extremely bullish at, you know, 32K and then extremely bullish at 20K. And then once we took out the previous high, that was bad. And then we lost the 200 exponential on simple. And then that was something we never did before. And then we keep doing all the stuff we never did before. Let's just say we finally do get down to 6K. Maybe everybody capitulates at 6K. I mean, I could see that. I could see us going back down to 6K and people are like, okay, something has changed. We now took out the previous high. We're now in a weekly bear market for the first time in existence, which we're actually very, very close to confirming already. We could see the 200 exponential has already rolled over red. The 200 simple is not quite flat at this point in time, but all it takes is a couple weeks below that point, and this is going to flip over neutral and then very quickly turn pink as well, at which point in time we will have entered into a bear market on Bitcoin for the first time in existence on the weekly time frame. Another first. So that's good, right? Well, not for the bull cult, but for everybody else it is. And I know what you're thinking. Crypto trend hater, stop being mean to Bitcoin. It's never going to 6K. Fuck you, I'm out of here. To which point I will say, okay, you know, good riddance. But let's just say all that does happen and we get down to 6,000 and the capitulation happens and everybody just quits. Or maybe the capitulation is what takes us to 6,000. The next likely scenario actually is the correction of the 5-wave macro structure, that's actually the completion of the A at the 236. At which point in time, once we hit the 236, the same way we did here, where it looks like we peaked, or arguably here, you know, this is a very, very abstract pattern. This does not happen often. You will go years, I mean, even a lifetime potentially, before ever seeing an expanded flat situation play out. I mean, it's very, very, very uncommon. And that's why it's so devastating is, you know, no one but the most elite technical analysts will ever expect this. And of those people, a percentage of a percentage of a percentage of people will be able to, you know, predict it or at least look out for it in advance, which is why we are literally the luckiest people on earth because we were able to see that in advance. So that being said, now that we've floated our boat so high, you know, that it's floating away, coming down to the 236, the next likely thing to happen would actually be an impulse rally back to the upside, or that's the completion of the A correction, a B, a massive rally back to the upside, followed by, again, you know, our minimum retrace for the macro that we would expect to get, which is the 382. So the same way we were talking about the 382 right here for just the wave from the bottom of the cycle to the top of the cycle, which we hit and we're now consolidating at and getting ready to break through. And that makes us look at the 0.5. The same thing happens when we hit the 236 right here. We get a reaction, you know, rally right here. We get a dead cat bounce, come up, put in another lower high, and then we melt down again. And then that takes us likely to 382. And then at the 382, we look for a potential bottom, maybe the 0.5, the 618 golden retrace, etc. So we don't know what's going to happen. We don't know that whatever happened right here is even going to be potentially happening. But here we get a 50% rally. So what is that Charles Dow theory? If we go from basically the top of this move right here, and then we take it down to what is the bottom, the moment we hit the 236, we say, okay, we're probably going to the 382. And then once we go to the 382, we say, okay, we're probably going to the 0.5. And then once we go to the 0.5, we say, okay, we're probably going to the 618. Now here, we didn't go to the 618. That was it. It was weak. It was pathetic. You know, the bulls were already slayed. You know, they were stabbed a bunch of times. They were still running on adrenaline, but, you know, they were dead. They just didn't know it yet. Now, in hindsight, Everybody knows the bulls have been dead. They're dead now. There are no bulls, okay? There's fake bulls. They're just called hodlers, okay, or influencers or whatever. But there's no actual bulls. We know that because no one's buying crypto. If people are buying crypto, we could say, oh, there's a battle going on between the bulls and the bears. There's no bulls. The bulls are all dead. They're dead. There's none left. So that being said, 0.5 retracement right here. So what would that look like? Let's just say this hypothetical situation built on top of another hypothetical situation built on top of another hypothetical, blah, 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 blah. Like hypothetical situation inception takes place. And we go from the top right here. And let's just say we get lucky, the magic 8-ball, Charles Dow theory, whatever it is, just so happens to take us exactly right here. And then we do get that bounce, and once again, we just get really, really lucky and just completely nail it to a T perfectly. Where would that take us back to? Well, that 50% retracement, likely, or maybe it's a 618, or maybe it's a 382 shallow retracement. We don't know, but that is our top of the B right here. That's our 0.5 Charles Dow theory retracement. That's at 20,000. So we break down through here. Everybody capitulates, as we get lower and lower, and then we eventually hit 6,000, and then that's it. It's done. Crypto's dead. It's a Ponzi scheme, blah, 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 blah. We go through that whole thing again, and then everybody says, oh, it's the fundamentals. It's government regulation. They wouldn't give us a spot ETF. They came out and, called everything a security, and now the SEC is going to regulate. I mean, I don't know what the fundamentals are going to say. I don't honestly care. It could be an asteroid comes down from space and lands on Michael Saylor's head, and carved into the asteroid says, fuck you, charlatan, and then, from God. I don't know what the situation is going to be, okay? But any of those seem, less than zero. Well, some more than others. So let's just say that happens. Let's say we get lucky again. Let's say the situation plays out exactly as predicted. The 0.5 retracement would be that 20K, at which point in time we would expect, okay, would this be a key resistance? Well, obviously it was the top of the three. It was the support that we're hanging on to for now. It was a previous cycle high. So we break down below it. We find support at the previous 6,000 level. We get a massive, and I mean a big, thick, juicy rally all the way back from 6K back to 20K. I mean, that's like a 239% rally. Now, at that point in time, what will happen? Everyone on planet Earth, okay, will be saying, this is it. It's the beginning of the next bull run. We're going to new all-time highs. Let's go. Everybody, I loaded up my bags at 60K and I still have them, but I'm going to pretend like I've been buying the whole way down because dollar cost average. Or maybe you are buying, I don't know. But regardless, then what happens after that? Well, actually, we just continue the retracement. So that's our A down. That's our B dead cat bounce of the macro move right there. 200 and something % rally. And then what is it really? Well, it's just back testing our massive, Bitcoin price action. This, whatever you want to call it, parabolic trend, whatever, my version of the rainbow that actually makes sense. Obviously, the rainbow has been destroyed at this point in time, just like every other fake indicator, the plan B garbage and all this trash that they make up in hindsight. If you can't use it to predict the future, or you can't verify it with, potentially what could happen, like what's the point of it? I mean, it's cool in hindsight. Everything's cool in hindsight. I'm like, oh man, in hindsight, if I would have bet on Leon Edwards versus Kamaru Usman, I would be a millionaire if I just went all in on it, because the odds at the end of that fight with 1 minute left in that championship fight, Leon Edwards was about to win the fight and I was about to hit it big. And then instead, what happens? Leon Edwards knocks Kamaru Usman the fuck out. And if you were watching that fight in real time and the odds, Kamaru Usman was minus 6,000 odds, which is basically guaranteed win. So Leon Edwards was something like, it was like 3,200 or something like that if you bet on Leon Edwards. So 100% obviously would double your money. So it was basically 32x. So if you put down $10,000, you made $320,000. Now, hindsight's great and it's fun and you talk about how great you did, but how does that benefit you into the future? I mean, it doesn't, and was it a fluke? I mean, arguably, yes. I mean, did I also lose money on Glover Teixeira in the last 1 minute when Yuri jumped on top of him and choked him the fuck out? Yes, I did. So it happens. 2 flukes can happen. So let's just say there's a massive fluke that happens right here. We get all the way back up here, we backtest, and then we actually go lower. Where's that take us to? 382. And what is that? That's 1,300. I mean, 1,337, depending on how you look at it. Let's just call it 1,300. That's the macro 382. And then at that point in time, I mean, is crypto dead? Is Bitcoin dead? Is there any future for it? Does anyone still believe in it? Oh, and look, conveniently, that just so fucking happens to be the 2013 high. So wait a minute. You mean to tell me, I know, bear with me now. You mean to tell me that the 236 lines up perfectly on the macro for Bitcoin's entire life cycle with the support that we found at 6K before the capitulation and then the eventual bottom of our last cycle? And you mean to tell me that the current support was the top of that, and that actually the 382 just so happens in hindsight TA to line up perfectly with the top of the one? I mean, that it's obviously a coincidence, but what a crazy coincidence it is. Or bots, algos, market makers, whales, manufacture, quote unquote, the price action in advance. And only when you look back at it can you see what's really going on. So I would say there's a legitimate reason to get pretty bullish at Bitcoin around 6K and a really fucking legitimate reason to get bullish at 1300. Now, here's the thing, okay? And this, no offense to the viewers, but let's be real. If we get to 6K, 95% of crypto believers, cult members, OGs, market participants, traders, they'll be gone. Because at that point in time, crypto will be dead again. It will be a scam again. It will be a Ponzi scheme, blah, 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 blah. And then everybody will be believers again at 20K at the absolute worst time, just like they were recently with this recent push up in the stock market. And then again, if you thought everybody had quit at 6K, I mean, what does the crypto space look like when we now take out the previous cycle low and go down to 1300? What does it look like then? Does anyone still believe in crypto? Is it completely dead? Are we even still looking at Bitcoin charts? Or is it just, a random penny stock shitcoin garbage that nobody even cares about anymore? Is it delisted? I mean, I don't know, but that would be a pretty good indication that, that's probably a good buying opportunity. So again, we don't know what's going to happen, but let's extrapolate that out just one more time. And let's just assume one more time that we're right about everything. Now, I know it's super unlikely to happen. It's very far out into the future. And the more times we build a case on top of a case that hasn't actually happened yet, the less likely it is to play out. But let us just say for 1 minute that there's a possibility that actually happens, and that we then take from zero down here all the way up to the all-time high, 70K. And then we go down to that 382, which we were just talking about. And then we say, actually, is that not the most bullish scenario? I know what you're thinking right now. You're thinking Crypto Trend Hater is the biggest bear ever, and he hates Bitcoin, and he's being pretty mean. And I get it. It's definitely mean. People don't like the truth. We know that. But it doesn't make it any less true. So let's just say all that plays out perfectly, which it's not going to. But let's just say it does. What would we then look at? Well, we would look at this entire 5-wave structure part of fib inception, okay? Now that's the top of the one. The retrace is the bottom of the two. And then we start extrapolating out into the future, like, another wave to the upside. And the same way, now let's just look back here really quick at something else, and then we're going to move on from here. But this is super important as we get closer and closer to these levels, and we're made more and more right. The same way we have the peak. The same way we have the peak at 1159 right there. Damn it. You motherfuckers. The same way we had the peak right there. And, oh my God. I remember my first time using TradingView. What are we even doing right now? Okay, so the same way we have the peak right there, and then we have the trough right there. If we just draw that out from the high to the low, and then we look right here, we saw, okay, we roughly went 2.5 Fibonacci extension to the upside. And that was our first wave right there. So what would our second wave be? Well, we would do the exact same thing again, and we would just take from the top of the 3 right here to the bottom of the 4 right there. And then we say, where did that take us to? Okay, exactly to the 1.618, which is how we called the top perfectly. And what initially gave us the impression, hey, there's a legitimate possibility that actually we could get a higher high and it would be the expanded Elliott wave flat. And that's how I, figured that out, came up with that theory in advance. So let's just say all that played out. And now actually what we're going to do is we're going to go from the peak right here, or the trough right here, the low, 0 Bitcoin, to the top right here. And then we're just going to extrapolate out the same way for our wave 1 to 2 to give us where the wave 3 target comes out. And this is where, I go from being the most bearish to the most bullish person in existence. Not because I'm just saying big numbers like 1 million, 100,000, 250,000, 10 spaceships, 1 citadel, whatever we're going to price money at in the future. Let's just say, potentially that whatever our denomination is still in dollars, whatever. Hypothetically speaking, we come down to 382 and then we fib from the peak, to the trough right here. And then what actually ends up happening? Well, let's just say we get that same kind of move. Maybe we go a 1.5, maybe we go a 1.618. I don't know what's going to happen, but hypothetically speaking, again, the more times we build on top of something, the more times we build on top of something, the less likely it is to play out. Now, obviously, we do get very, very lucky, very, very often. So let's just say it's somewhere in between the 1.5 and the 1.618. That gives us our next cycle high. Now, granted, the first cycle was basically 3 4-year periods, so 12 years up. And then if we're going to correct, that's still part of the 12 years technically. But, this extra correction here, the difference between correcting just our wave 5 versus correcting the entire 5-wave structure is going to take a lot more time. So realistically, maybe we miss a whole 4-year cycle without putting in a new all-time high. So we come up here, put in a new low, come back down, and then, that's somewhere around there. Again, very, very hypothetically speaking. So we'll just slap it right here and say that it takes one extra period. So we go basically a 4-year period without putting in a new all-time high. So by the time we come up here and hit this retracement of the low to high, we top out at that, whatever it was. What did we say? The 0.5 was 20K. So let's say we come up here and we peak out this time at 20K in roughly February of 2026. Roughly. Or to the exact day. I don't know what's going to happen. And then after that, we continue to the downside. But that wastes like a whole 4-year cycle without putting in a new all-time high. So we're just going to hypothetically say, okay, the actual bottom of the 5-wave correction, which turns out to be actually just the macro 2, is October 2026. And then we start all over again, basically another 12-year cycle into the future. So this is our 4 years, then another 4 years, then another 4 years after that. So now we're talking about like 2039. So like way, way into the future. So hypothetically speaking, in 2039, the target for the top of the 3 would be roughly 745,000. Maybe we undershoot it a little bit and we only go to 462,000. Maybe we go a little deeper retrace. Maybe we go a little shallower retrace. So maybe it's 1 million, just nice even round million. We undershoot it by like quarter million. We don't know what's going to happen. We don't know. But there's a possibility, that we come out and do that 1.618. Maybe we underperform and we do a 1.236. Maybe we do, some other random number. It's worth looking at. But again, the further we extrapolate out some of this, the less likely it is to play out. But hypothetically speaking, something like this happens. Well, this one looks like that could actually make a lot of sense. So it's not as exciting, but let's just say, for instance, we go to 170,000. I mean, it's not a bad cycle for like 12 years later. Now, I know for the Bitcoin people, they're like, it's not going to take 12 years. You're stupid. 170,000. Huh, that's chump change. I don't even get out of bed for that, fucker. To which I would say, we don't need a gazillion % move to the upside if you own more than $10 in Bitcoin. So, I mean, are you a true believer? I mean, I guess not. If you have to get to 170,000 before you're like ridiculously rich. But, we have this little deal going on here. So maybe we extrapolate this out a little bit further into the future. Oh, that was already the extrapolation of the extrapolation. So maybe it ends up something like, around here, 1.236, 200,000, whatever. And then we just do the same thing over again. Then after that, we see the retracement. We come back down here. We put in another, 12-year cycle. Then we have a 4-year extension on top of that. So actually, like the Bitcoin 12-year bull market goes into like, a 4-year extended bear market with no new all-time high, followed by another 12-year bull market, followed by another 4-year, and then again, off to the new all-time high. Maybe this time it goes to $1 gazillion. I don't know. What's a dollar going to be worth in 2036? I mean, we don't know, but there's a strong case to be made for the fact that actually we just completed our first of 5 waves to the upside, and we're in the middle of, you know, a disgusting, nasty correction that, you know, obviously nobody thinks is going to happen. But, I mean, if it does, it's going to be nasty. So that's the macro view. Again, a little refresh. I don't know why I do this, because you can just go watch the old video, because it's literally the exact same thing, because, I mean, well, we've just got lucky a lot. So when it's all said and done, that's what I'm looking at. That's the macro. That's the key targets. That's what, you know, likely will happen with Bitcoin. Obviously, the more correct we are and the more this plays out, the more likely, you know, the further out situations look. And then obviously, you know, if we start to diverge from this path, let's say we do actually put in a bottom somewhere around like 15K, you know, we can reevaluate from that point in time. But this, to me, this is the full on like macro, what's likely to happen, what could happen, you know, the potential like bull, and well, before that we have a bear case as well. So let me jump in the chat real quick here, and then we'll keep going. So what's up, Prague? What's going on, everybody? Honkiness. Hey guys, future looking bad for major indices. Yeah, of course, man. I mean, you know, we talk about it all the time. There's like an extremely high likelihood that if we close literally to the penny at the lows on a Friday, that we see continuation the following week. So we would expect continuation, obviously, which, again, no surprise. Adam WJS says, laugh my ass off. Not sure what you're laughing at, but I'm sure I was funny. There's a borderline, like, obnoxious and hilarious, I know. And I live my life right on the edge of that. Adam says, about the asteroid landing on Sailor. Oh, nice. Okay, I'm glad you made a reference to that, because you know it's going to be a while before I look at it. But also, though, you know, I mean, I don't know what the betting odds are of Michael Saylor getting hit by an asteroid with, you know, a message from God, but I would say it's not my base case. We'll put it that way. It's not my base case. But, hey, who knows? Maybe Elon Musk, like, shoots an asteroid out of the sky and uses, like, a super laser to carve, fuck you, Sailor, you know, God on it. And then it's like, oh, well, it wasn't actually technically from God, but also it did play out perfectly. Elon threw an asteroid at Michael Saylor and also called himself God. That actually, you know what? It's less than zero possibility. I mean, I give Elon a lot of credit, okay? He's got a lot of money, and he's pretty fucking smart. So, and also, he's kind of a dick. So that actually is my base case, is that Elon shoots an asteroid out of the sky, and it lands on Michael Saylor, and he proclaims that he is God. That's my base case now. From here on out. Now, probability of success, but worth paying attention to. So let's look at our indicator oscillators here, and then we'll keep on moving on. So here on the daily, you know, still very much in a bear market. Anybody that's calling for new all-time highs or saying that we're not going to put in lows, obviously brain dead retard, no surprise. So, you know, go ahead and just unsubscribe from all those morons, or, you know, stop watching them on CNBC or whatever, you know, whatever it is. Whoever's telling you that, you know, we're not going to new lows, if they called the lows are in right here, and then the lows are in right here, and they're in right here, and then they're in right here, well, when we get to 15K, they're going to say the lows are in, and then at 10K, and then at 6K, and then matter of fact, by the time we get to 6K, they'll have quit, and they'll be doing, you know, fake technical analysis or videos on whatever the new fad is, you know, Beanie Baby digitals or NF, you know, tea bags. I don't know what it's going to be. Regardless, they're going to be calling the lows the whole way down, and then finally they're going to say, oh, I told you the low was at... No, they'll be gone by 1300. So we'll be the only one calling the low. And we can look back at this video, you know, 4 years from now and be like, holy shit, that's so crazy. How'd we get so lucky, man? That fucking 8-ball. So we'll see what happens. You know, we're still holding above that low for now. So there is still a tiny little buffer of bullishness. You know, it's possible we don't go lower here. If we do close a daily below 19K, like, come on, let's be real. It's probably going much lower. Now, everybody's calling out all these indicators that say the bottom is in and everything. Sure, okay. Maybe it is. Maybe it was last time. Maybe the previous data points, this never happened before. But you know what? This is the year or the, you know, decade or whatever of things that have never happened before. So instead of looking at the base case, you know, we'll look at the bear case, like, for what hasn't happened before. That way we're prepared. So we still have momentum to the downside. Still looks disgusting. We're basically revisiting the lows. All red histograms, red slope line, below the zero line. 200s, slope to the downside, we're below them. 8 and 21 cross the downside, we're below them. So we know that if the bulls do nothing, we go much, much lower. If the bears do nothing, we go much, much lower. So literally the only thing that can save price action right now is if there's somehow is like a rebirth of bulls. Maybe Michael Saylor borrows $1 trillion and pumps it all into Bitcoin. I don't know. I don't know what would happen that the bulls would suddenly like be alive again. Doesn't seem likely. Okay. Like in all reality, like right now the bears are eating bull steak and they're just taking a little break while they consume the bulls before we go much, much lower. So everything on this chart looks terrible. When do we change our minds? Well, if we put in a new higher low right here and it starts to hold support, the stochastics start curving back to the upside. The histogram shows one green and then another green. We start approaching the zero line. We cross above the slope line. The slope flips blue. The stochastics exit the bearish control zone. We get a hard buy signal. We get back above the 8. We get back above the 21. The 8 and 21 cross back bullish again and turn green. We back test the 200 exponential. We get back above the 200 exponential and back test the 200 simple. We get above both of them and then eventually the slope turns blue. And then, and only then, will I be fully bullish. But there's how many steps along the way? You know, like 10 or 12 steps along the way. You know, and again, that's just trading the technicals and sticking to, you know, our technical analysis. So it doesn't mean we just buy in at 32K because now we're massively bullish because all those things happens. It means that each time one of those things happen, our little notch from how bullish are we right now on Bitcoin? Zero. We're zero bullish. We're like half of one notch bullish out of 10. And that the only reason we're at half right now and not just all the way at zero is because we didn't put in a new low. But you guys know what's going to happen. When we come back here on Wednesday and we do our stream Wednesday night at 10 p.m. Eastern Standard Time, you know what's going to happen. You know what the thumbnail is going to be. I don't even have to tell you. You know. It's going to literally say days without new all-time lows, and then there's going to be a big zero because we'll have put in, well, cycle lows, but we'll have put in a new low. You know that. You already know that's what the thumbnail is. It's nice for me too because I don't even have to make a new thumbnail because we already have that one. So that's what's going to happen. Maybe. Maybe not. Nothing certainty in these markets, but I like the odds. So on the daily, we know what has to happen for us to get bullish. On the weekly, let's look at that. I mean, this looks disgusting right now. Below the 200 exponential, bear. Below the 200 simple, almost flat. So literally, again, the bulls have to act here. The bulls have to get the price back above 23,250 or we will literally see another first, okay? And I'm not talking about the good kind of first where, like, you know, you bang a 10 or, you know, buy a Italian sports car or, you know, go to space, like, you know, whatever cool, like, first that you could have. I'm talking about the first time something really shitty happens to Bitcoin ever, which is a weekly bear market. So all the people that are like, if you just buy Bitcoin and then wait 4 years, you'll never be negative, because stuff like that starts blowing up, okay? Arguably, it's happened already. Because, you know, if you bought here at the absolute peak, now granted, not very likely, you don't want to be that guy. You don't want to be that guy. But let's just say you did. Here we are 4 years later, and, you know, you're upside down. So if you bought Bitcoin and waited 4 years, you would never be negative. Well, that actually is no longer true. So Michael Saylor's whole base case for buying Bitcoin and then waiting 4 years, well, now he looks like a charlatan little bitch. So, I mean, at this point in time, if the facts change, do you change? Does Michael Saylor actually grow a brain and pivot? Or is he so ingrained in the cult-like mentality of Bitcoin that he's unable to pivot and take the multi-billion-dollar loss on the loan that he took out? I mean, I would say yes. I would say he's in over his head. He's completely committed, and there's no way he pivots. He literally will ride the thing down to zero before he would change. And if he did pivot, which would be the intelligent thing to do, but, you know, he's a rocket scientist. I don't know if he's actually smart or if he's just, like, educated, because there's definitely, like, a big difference between, like, street smarts and, like, book smarts. I would say, you know, the guy's a fucking rocket scientist, so street smart, sure. I would say he's, like, good at marketing himself and his idea, sure. But obviously he sucks at technical analysis and investing. I mean, he's obviously a fucking moron because, you know, I mean, he lost, like, multiple billions of dollars. So you can't be both. You can't be good at investing and also down multiple billions of dollars. They're, you know, it's not possible to be both those things unless you have also made exponentially more billions of dollars, which he hasn't. He's a loser, dumbass, piece of shit. All right, so that being said, Michael Failure, let's just say he capitulates and says, you know what, fuck it, I was wrong, and sells, maybe that's the catalyst that drives us lower. Maybe Michael Saylor gets a margin call. Maybe Elon hits him with the asteroid. Maybe he has nothing to do with it, and it's government regulation. I don't know what's going to happen. But I know if this flips and does something it's never done before, the same way that now we're upside down on positions like we've never been before, the same way that we took out the previous all-time high like we've never done before, all this starts to look a lot more viable. So we'll see what happens. Obviously, we talked about the weekly and how this was starting to look bullish. And I told you guys I literally don't believe it, because this is how you trap people and get them stuck in the markets. You move the histograms back up, you get the hard buy signal, and the momentum start building to the upside while you're back testing resistance. Yeah, I don't think so. That's literally how you trick people and get them to buy, the top, or stick them in position. All right, so we talked about this a while ago too. The absolute bottom right here was literally at the cross between the 821. I'm on the monthly now. The absolute bottom right here was at the cross of the 821 on the monthly right now. So we talked about how this cross of the 821 on the monthly, this wick down here, could be based on these 2 data points, which is not much, but that was our all-time low. But again, I told you how I wasn't buying it, but in the meantime, we were going to scalp to the upside and see what happens. Well, now we're getting another big, thick red candle, bearishly engulfing the previous month before that, and we have 2 days and 23 hours left. So we're very close to closing a new monthly candle at a new low and invalidating just one more thing that's quote-unquote never happened before. Which is strange, because you know what else has never happened before? Bitcoin has never been in existence on planet Earth or in anyone's minds, thoughts, or dreams while we were going into, a potential bear market on bonds, or bull market on yields, or, next level quantitative easing, or record levels of inflation, or DXY, breakout. All those things never happened too. So all of a sudden, all the shit that's never happened before is starting to happen, and all of a sudden our whole base case theory starts looking a lot fucking, smarter, which obviously playing out beautifully. So that being said, we floated our boat so high that, completely full of water. I'm gonna float right out of here. This just looks like shit. We're in the bearish control zone right now, obviously threatening the cycle lows, doing things we have never done before. The likely target to the downside at this point in time seems like 14K, the previous close from the 2017 all-time high, the wick up here from the little like one coin, run up. That seems like our next key target. We have a bunch of other targets as well based on the fibs and all that crap. But when we really zoom out and we look at the monthly and we say, okay, keep it simple. What is the likely area that we're going to come to? Well, we had quite a bit of support at that 20K level, obviously. This is our third candle now at that level. So if we do break down from this level, very, very likely we go to 14K. So that's our next target. And then if we break down through that, probably chop around, do some, then 10,800, which that's our close from right here. Seems really likely. And then again, if we break down from that, that's when we start talking about 6K, which again, seems very likely. And then 3K. And then, again, we look at the previous high from back here and we say, okay, 11,000, whatever, blah, blah, blah. So there's a lot of confluence on the way down as Slinky theory goes into full effect. So to tell you the truth right now, you're like, oh man, are you bullish on crypto or are you bearish on crypto? I mean, still very, very bearish on crypto. I know sometimes it doesn't sound like it, and I sound like a crypto fanboy, and you're like, man, you're awfully positive about crypto when we're in a bear market. And you know what? I'm guilty of that, obviously. And clearly I'm guilty of extreme levels of sarcasm and also some narcissistic comments as well. So that being said, looks like trash, continue to look like trash, and completely underperform. Even these last recent scalps have just been complete trash. And you know what? If equities continue to sell off, crypto continues to trend towards zero. I do actually have something that I haven't mentioned before in a stream that I want to talk about as well. A sort of epiphany, so to speak. We'll get to that in just a moment. So Ethereum holding up better than Bitcoin, still substantially higher. So, what is going on with Ethereum? Is it just staying strong because of the news event? Probably. What is the measure move breakdown for Ethereum? Obviously we had potential target extrapolated down here at about 1100. We have the breakout from the channel, which was the extremely bullish level at about 1234. Those are key areas that we're watching out for. Obviously we don't have to worry about this because we lost the channel. So the likelihood of that seems extremely unlikely. We do have a possibility, same with Bitcoin, where essentially we just have that one leg up or the A leg up and then the B leg down for a higher low and then a C leg up. Now, it doesn't seem nearly as likely if Bitcoin can't put in a higher low right here and breaks down, Ethereum is probably just a matter of time before it's back below 1,000 again. I think probably Ethereum futures and, you know, the cult-like mentality and the event behind Ethereum essentially switching from proof of work to proof of stake is likely drawing in many crypto cultists into Ethereum as opposed to being in random shitcoin that I've never heard of, you know. So instead of people being like, oh man, Cumrocket's the one for me, or, you know, whatever, Dogecoin, or, you know, whatever other dog coin or cat coin, or, you know, whatever other trash coin there is out there that people like, instead of going in those, they say, oh, this big thing's coming up on Ethereum, so we'll all pile in here. So everybody's on the Ethereum bus right now. What they don't realize is that the bus is getting ready to drive off a cliff, and, you know, when it hits the bottom of the cliff, it's going to explode and kill all of them. Or maybe it's just amazing and it just goes to the moon. I don't know. Probably not, though. So we'll see what happens with Ethereum. Obviously, you know, everything looks like trash with Ethereum. It's just holding up slightly better. There's a couple other cryptos that are holding up slightly better, you know, Matic, Binance, etc. But we know that if shit hits the fan, Binance is probably one of the ones that's going to have the worst move to the downside. All right, so Bitcoin dominance. This is what I want to talk about. So you guys know my base case on Bitcoin dominance was this triple bullish divergence, breakout to a new high, and then likely we continue back up, back test the 200 exponential and simple, put in a higher low, and then it starts trending to the upside. Well, when this measure move underperformed and rolled back over, we back tested and lost the top of that channel, I basically said, okay, this is not what I'm expecting. There's still a little bit of hope on this ascending green support line right here, but if we close below that, you know, I basically just expect Bitcoin dominance to go straight back down and put in a new low, which, you know, it didn't happen in a single candle, like I hypothetically said, but it doesn't look good right now. Now, again, there's still a tiny little bit of hope because we have this low right here and then this low right here. And so maybe it finds support, puts in a higher low, and then, you know, it continues on from here. And then it actually ends up being, you know, similar to what I was predicting, but not quite the same. Maybe it's something more like this. So is it possible that happens? Sure, it's still a possibility. But, you know, like I said, I had a little, you know, epiphany or realization or just something, you know, hit me. And I was like, you know what? This could actually be a really big factor. Something huge changed on this chart that nobody ever talks about. Okay? And this is a big fucking deal, in my opinion. A big deal. Obviously back here, you know, Bitcoin is 100% because it's the only crypto. And then Ethereum takes a little bit. And then a bunch of other shit coins take a little bit. And then more and more shit coins take a little bit. And then eventually, you know, that the shit coins stop out. We get the blow off top. And then Bitcoin starts gaining back dominance. Well, somewhere along the way, something changed on this chart. And again, I didn't realize it. I mean, I did realize it, but it didn't occur to me. And obviously has not occurred to anyone else on Earth. Or I would have heard someone else talking about it, or you would have, or whatever. But at some point in time, you know, we ended up with a bunch of stable coins. And the stable coins are technically part of the crypto market cap. So now, instead of people going, you know, if you weren't in the crypto space for a long time, back in the day, the way it used to work was, you know, you put your currency on an exchange, and then with that money, you could buy Bitcoin. And that was it. And that, you know, for the most part. And then if you wanted to get some random shitcoin, you had to take your Bitcoin then, and then you traded your Bitcoin, which was paired to Ethereum and whatever else shitcoins. But you had to go from your dollars to your Bitcoin to your shitcoin. And then when you sold out of your shitcoins, you went back into Bitcoin, and then you could sell your Bitcoin and go back into dollars. But at some point in time along the way, Bitcoin no longer was like the exclusive middleman, the trading pair in between your dollars or whatever currency and your shit coins. So before, you know, it was basically like the US dollar of oil trading. So the same way that everybody talks about how oil is going to go, or I'm sorry, the US dollar is garbage and it's going to go to zero because now, you know, China and Russia are trading in rubles or, you know, fantasy miracle, rainbow dollars or whatever they decide, you know, the new currency is going to be or whatever, or, you know, maybe it's crypto. But that was, the dollar was essentially the Bitcoin in that situation. It was the trading pair between everything else. Now, it doesn't make the dollar more valuable necessarily. It just makes more demand for it. So once they got rid of the intermediary, the middleman, Bitcoin on those trades, and you could then go from your currency into an exchange, and then from that, you didn't have to go into Bitcoin anymore. You could just go straight into, Cumrocket or Shiba Inu or whatever. So now there's less demand or less reason for people to hold dollars or trade through dollars. So now there's less volume going into it. So there's less liquidity. So, it changes the dynamic of things. Well, along the way, they obviously created stable coins. So the stable coins were essentially either the intermediary between the shit coins, the way that Bitcoin used to be, and the dollars, or just an alternative way where you could basically just keep money in that asset instead of switching back to dollars for multiple reasons. Maybe you're trying to avoid a taxable event because of your laws in the country you live in. Obviously, it's not financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research, trade responsibly. Also, not your tax professional. Do your own research. Look on that for yourself. Talk to an accountant, whatever. But in some places, you would actually avoid taxes if you didn't go back to your currency and you stayed in shitcoins. Or alternatively, there was other incentives like staking. Like you could say, keep a bunch of money in whatever stable coin, and then you would get paid an annual rate of 6%. Or if you were a brain dead moron, you might get 20%, if you bought into some scam like a fucking absolute idiot retard, which many people did. And if you're that retard, I'm sorry. I hope you learn from it. If you don't, you're a retard. If you do, you just got a lesson from the school of hard knocks. So one of those situations sucks, but is okay long term. The other situation, it's like, well, you get what you deserve, obviously. So that being said, the fact that now, instead of going back into dollars or instead of going back into Bitcoin, people are going into stable coins and then just staying in stable coins, that changes the entire dynamic of the Bitcoin dominance chart. So in order to get an actual realistic picture of this, we need to look at a Bitcoin dominance chart X stable coins, like no stable coins included. And I know what you're thinking right now. You're thinking, God, this guy is a fucking genius. I'm not, though. That's the thing. I'm not. I'm just average guy that puts in the work, okay? So what we have here is, and you might be thinking something else as well. You might be thinking, well, who cares? Stablecoin's not that big of a deal. There's no way it's enough to change this chart. Well, let's look at our coin market cap chart. And by us, I mean, I'm going to look at it on my other screen, and then you can just imagine it in your head or pull it up in your own screen. But Tether has actually reached, now just for perspective, the Bitcoin market cap right now is $376 billion, okay? Then the Ethereum market cap, which is the second biggest, is $176 billion, okay? So that's a lot. That's a fucking lot. But now the Tether market cap, which is obviously the most scammy piece of shit ever in all of existence, the Tether market cap is $67.5 billion, okay? The next biggest crypto is USD coin, another stable coin, and that's $52 billion. So now you have 376 billion is Bitcoin, 176 billion is Ethereum, and then you have a combined like $120 billion of trash bag stablecoins that are the next third and fourth biggest cryptos there are. So if you have 120 billion worth of stablecoins and you didn't have 120 billion worth of stablecoins back here, that changes this whole fucking thing. So the same way that people are like, oh, true inflation is this based on John Williams' shadow stats, and you're dumb if you think that the actual inflation rate is that. Okay, sure, whatever. That's fine. It's the same thing here. If you think that the actual market cap of crypto, like actual real cryptos, and let's just go to the total market cap right here. This is the actual weekly market cap of cryptos. If you think the actual market cap of cryptocurrencies is 922 billion, it's really not. I mean, it is technically because there's trash bag stablecoins in there, which arguably USD coin is not nearly as trashy as scammy Ponzi scheme Tether is. But 122 billion is a big fucking deal. It's a big fucking deal. 922 billion, and we're going to take away 120 billion of that. That means really it's 800 billion, and then the rest is just sitting in cash, but the cash is actually, digital crypto stablecoins. So that really throws off the picture a lot when we look at it. So, in hindsight, is that Bitcoin dominance chart actually that useful now? It's really not. Now, I don't know. I haven't looked into it that much. Again, I just had this epiphany in the last couple hours or day or whatever, you know, I don't know if there's a chart on TradingView for Bitcoin dominance X stablecoins. And that's just the two biggest stablecoins. We know obviously there's a bunch of other like stablecoins as well. None nearly as big. But the fact that there's multiple stablecoins like in the third and fourth position that make up, you know, 120 billion of the 922 billion in crypto, that's a big fucking deal. So that changes the perspective quite a bit on all of this. So what is the real crypto market cap? And then, you know, how many stable coins were there back in the peak in 2017? And what was the market cap of them back then? I mean, it's a big difference. So anyway, I just wanted to bring that up, point that out, discuss that a little bit. Just a little food for thought, okay? You got to understand, I know a lot of times I'm right about stuff, but the real goal of this is to not only teach you like my technical analysis and ways of thinking about things, but the real goal of a lot of what we do here is just independent thought, thinking outside the box, like hypothetical thinking about possible scenarios that no one else is looking at, considering, or whatever. Because when you start thinking outside the box, you gain a huge advantage over everybody else. Because there's just a bunch of retards regurgitating the same thoughts with no ability to use their brains for themselves. So even if you think about something and it doesn't happen or it's wrong or whatever, the fact that you actually thought about it has given you an advantage over everybody else that hasn't thought about it, because now you're saying, okay, if this happens, there's a possibility this happens. It might be a small possibility, but look, I mean, if an asteroid falls from the sky, strikes Michael Saylor, and on it there's a message from God, it's going to be a big deal. And a lot of people are going to say, oh my God, there really is a God. And then there's going to be a God cult. And then there's going to be, you know, a Michael Saylor cult, which is like, oh, God struck down Michael Saylor because he was too powerful. And actually, like, even though he's dead now, he's the true Messiah of Satan or charlatanism or whatever it is. You know, so there's going to be like, you know, crazy stuff going on. And everybody else is going to be like, oh man, this is nuts. There really is a God. And then we're over here looking at Elon thinking, okay, bro, we know what you're up to. So again, maybe that doesn't happen. Maybe it does. But by just having that ability to independently think in advance, it gives you a huge advantage over everyone else, because now you start thinking outside the box, just in general, in life in general, and you're going to have a huge advantage. So keep in mind that that's a lot of what this is about. So maybe it doesn't matter that there's all these extra stable coins now, and that doesn't change Bitcoin dominance or total crypto market cap. But again, you know, the fact that we're the only person that realizes this or thinks about this or discusses it, you know, or the only group of people that do this or that actually still have independent ability to think for themselves, huge, huge advantage, okay? And it might not make you rich today or tomorrow or a year from now, but I promise you at some point in time in your life, you're going to think outside the box on something, and it's going to benefit you by either, you know, maybe saving a life, maybe solving a serious problem, maybe making you extremely, extremely rich, maybe, you know, letting you convince two very attractive women to have a threesome. I don't know what the scenario is going to be, but at one point in time, you're going to think back to this exact moment and say, virtual high five, very nice. Now, I don't know what it's going to be, but I promise you it will happen at some point in time in your life. So thank me then, or I mean, thank me in advance right now, that's fine, but you know, it's a lot more meaningful once it's already happened and you're like, dude, you were right about all those things. I'm now rich, have regular threesomes, and I save people's lives. So, but you know what? Don't even worry about it. You don't even have to thank me. Just inside your head, you can. All right, so that's enough of that. Let's do some actual technical analysis. All right, so we got 13 watching. Make sure you guys smash up the like button. You know, beat it up. So what should we look at? Okay, so not a lot has changed, obviously, over the weekend. Obviously, you know, we can look at how the closes were, but, you know, we streamed pretty long into the day. On Friday's stream, we went, what did we stream? 11 to 2, I think, or something like that. So market was only open for another couple hours, and I don't even think we really got like any bounce at all or any further downside. Basically, the move was done by then. But when we look at the TNX, obviously, you know, people calling for the top again. We talked about the hypothetical head and shoulders. We talked about the descending channel breakout and potential new all-time high. Obviously, Jay Pizzle, my Nizzle, came out and, you know, basically said like, hey, to all you people that think I pivoted, I didn't pivot and you're fucking stupid. So, you know, again, we expected that. We knew that was going to happen, you know, regardless. Beautiful market rally. Now looking pretty weak, obviously, on the regular markets. So what do we expect yields to do? Go higher. Here on the daily, multiple green histograms above the slope line, above the 0 line, in the bullish control zone, above the 8 and the 21, bullish across to the upside, above the 200 exponential, above the 200 simple. Everything bullish right here. Again, the only thing that could be more bullish on shorter time frames is if we take out the recent cycle high at 3.5. And the only thing that could be more bullish on longer time frames is if, we break out to new all-time highs, which is a little ways away. Now here on the weekly, we had the 200 exponential bullish across the upside above the 200 simple. 200 simple is basically flat right now, very close to confirming to the upside. 821, very, very bullish posture right here. After a back test, lower low, psychs people out. They say, oh, that's it. It's peaked, it's peaked, it's peaked. And then what's getting ready to happen? Getting ready to explode to the upside. Where are we going? Well, we talked about it multiple times, but we're basically headed up to 5. We're headed up to 5. The previous important swing level was about 5% on the TNX. That's where I expect the Fed funds rate to go, essentially, is to 5 to combat inflation, blah, 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 blah. All that trash we talk about every single stream. Right now, we heard the first signs of that. We didn't hear the number 5 yet, okay? The Fed chairs came out for the various different Federal Reserves. They came out and said, expect higher yields. They started hinting at stuff like that. They didn't say it yet, though. They didn't say the number 5, but they will be very, very soon. We'll see it in the dot plot, or we'll hear it from, one of the Fed chairmen or chairwomen, whatever. We'll hear somebody say 5%. And then all of a sudden it will go from a 0% probability of 5% to a maybe 20%, and then 30%, and then 50%, and then eventually it'll be 75, and then after that it'll be 100, and then we'll start looking at, even higher levels. Now, I don't know how bad it gets. I don't know what's going to happen, but, likely that's the scenario that happens. Or it just rolls over right here. It goes down. Inflation's over. We go back into, parabolic melt up bull market. Quantitative easing restarts. And, just the whole world goes back to good. Russia's like, hey, I was just fucking around. And Ukraine's like, yeah, us too, man. You want to just stop warring? And it's like, yeah, okay. And then just everything's good again. So it is possible. It is possible. Not my base case, though. And then here on the monthly, obviously, we're literally days away from closing a bullish engulfing candle that took out the last 3 months in a row. Everybody was saying this was the top right here, shooting star. But in all actuality, 200 exponential has flipped bullish. 200 simple is flat, about to flip bullish. Bullish control zone, all green histograms, blue slope line. This looking pretty fucking bullish to me right now for the breakout of our 30-something year downtrend and, parabolic explosion to the upside, which again leads us to 5. So what's the number to look out for? 5. The number of the day is 5, or the month, or the year. I don't know. 5% expected. So oil was able to hang on. WCI crude, U.S. oil was able to hang on to that 821. So if we just hang out here a little bit longer in between the 8 and 21 on top of them, we're likely to get the bull cross and to move back to the upside. Does it go put in a lower high? Does it put in a higher high? We don't know. We know targets to the upside would tell us there is a high probability that essentially we would get at least a 50% retrace. Charles Dow theory would take us back up to our measure move breakout of the channel and the heart line as well, 102. And then obviously we have the 618 target, which would be 107. And then obviously, between the 786 and just putting a lower high descending channel resistance could take us up, basically anywhere lower than 122 and still be a lower high and still be operating inside the channel. And you guys know, as long as we're inside of a range, trading that range, we buy support, we sell resistance. The likelihood of the breakout is very, very low until the breakout happens, in which case, then that's it. It's done. So we buy support, we sell resistance until they stop working. So oil likely headed up short term. Now, here's what I don't like about oil. Obviously, we're below 200 exponential and simple, very close to it. If we break through that, we get a pretty aggressive move back to upside. Obviously, the Saudis have come out and said they're going to curtail, really OPEC has come out and said they're going to curtail supply because everybody's manipulating the price, because with how much demand there is and how big a FOMO situation there is for oil, the price should be way higher. They're not happy with how high oil price is right now, even after, literally. My bad. Let me just go to a longer time frame. I mean, I find it amusing that, literally oil has been substantially lower for a long, long time. And now all of a sudden it's not good enough. I mean, we literally haven't been at oil prices this high since 2014. We traded the majority of 2014 to 2020, below $75 a barrel. the majority of the price action essentially took place in this range right here. And this just shows you the level of greed. Now, I'm not calling out Saudis in particular or OPEC in particular, but just the mentality of when somebody has something, they think it's worth infinite amounts of money. But when somebody wants to buy something, they think it's trash. But essentially, we traded the majority of the last, 8 years between $35 a barrel and $73 a barrel. Okay. So just think about this for a minute. $35 to $73 a barrel. So let's just say roughly around like $50 a barrel was just your average price throughout that period, which I think is pretty reasonable. So we're trading at almost double the price of a barrel of oil that we've been at for the last 8 years. So if we look back and say, okay, let's just hypothetically look at what the economy, what the world looked like, what production looked like, what usage of oil or energy in general looked like for the last 8 years. Okay, and I know it sounds like I'm making a bear case for oil, and I am, short term. I'm still very, very bullish on energy. But short term, we're trading at twice the price of oil historically for the last 8 years. Now, it's not a crazy price compared to the, 15 years before that or whatever. Going back to 2007, we traded the majority of the time around this level. Realistically, it's not crazy. But the fact that we were trading at 50 for so long, and now we're at 90, and now 90 is not enough for OPEC, just tells you how greedy these countries are, or how greedy people in general are, or just the overall, just like moronic way that the human brain thinks. They weren't crying about oil being undervalued at $50 for the last 8 years. But now that it went up to 100, 120, 100 and whatever, now all of a sudden, even though there's no way that the world economy, there's no way that oil consumption or actual demand is higher than it was this whole entire time right here. I mean, maybe some of the areas around here, but not recently. I mean, the world was fucking booming. Now, call it a fake economy. Say it was driven by Federal Reserve rates at zero. Say it was driven by negative rates in Europe. But the world was fucking booming going into the Rona period. 2018, 2019, 2020. That was peak. We know that was peak production on everything. Because since then, China has been in shambles. Lots of other countries were locked down. There was a lot of shit hit the fan since then. And we know that the demand for oil is not better than it was back then, because a lot of shit's not back online. Production is less. So why suddenly is oil not good enough to be double what it was that whole time right there? And, delusional OPEC, manipulation, whatever. Obviously, everybody likes to make money. So, I don't fault them or whatever, but just when you hear this, everybody talking about how there's all this extra demand, when you hear OPEC saying the prices should be substantially higher because of this demand and everything, and then meanwhile, China is still on lockdowns because, their, stickers aren't as good as everybody else's stickers that you put on your arm to stop you from, having sticker shock when you see something expensive, like your favorite Mexican beer or something like that. So when you see that when you see that this hypothetical, Mexican beer related situation where you stick something in your arm and then, you don't get a hangover from it. When you see this hypothetical, and then you say, oh, okay, that does actually seem strange that all of a sudden we would need more oil than when the entire world economy was booming. Huh. And you're like, well, what about Russia? Okay, sure, whatever. So anyway, base case on oil. Does it go back up here? Does it get a pushback to the upside? Maybe it does. But more realistically, we probably are going to see, more medium to long term, something like a legitimate backtest of a 200 exponential and simple and like the low to mid 70s. Obviously, hard sell signal, Stoch's trending to the downside, bunch of red histograms, backtest of the 200 exponential and simple, very, very common. Obviously, when we break below them, we backtest above them, get rejected and go lower. We break above them, we backtest, revert to the mean, find support, and then go higher. Seems likely. All right, so anyway. Crushing. All right, so I laid out some pretty important scenarios, I think, in this stream. So now let's talk about this. What are those? So obviously, we nailed it. We got lucky. Everybody was super bullish right here. We're back on top of 200s. Everybody was like, well, historically speaking, when the 50 crosses above the 100, the bull market is back on. And once we've moved back to the upside, 50%, we're no longer in a bear market. dead cat bounce correction. We're actually bullish now. Well, look how that worked out for all these fucking morons. So the 821 crossing back to the downside. All the idiot retards are trapped in these positions. They probably bought at the absolute top like brain dead idiots. Maybe they bought somewhere along the way and they're still in profit. But in a single candle, we basically just took out the previous. Anybody that bought in the stock market in the last 30 days, the last month, is now is upside down. So just think about that. And this is the Dow Jones. So if you bought it like some other trash stock or whatever, it's probably even worse than that. But on the Dow Jones, if you bought these top 30 stocks, the best performing 30 stocks, by market cap, whatever, and overall like quality, the good stuff, not the Cathie Wood ARK fund shit that doesn't even make profits. If you bought the good shit anytime in the last 30 days, you're now upside down in your position. So just think about that. And that was one single candle. And we know historically that when we close, obviously if we close a big bearish candle like this, that's bad on a Friday. But if we literally close at the lows, and I mean we closed at the fucking lows, like there's no buying. How many people bought at the end of the day, which is normally when Wall Street smart money comes in, the last couple like hours or minutes of the day? No one bought, okay? Zero. There's zero buying. We literally closed at the lows. Like the lowest that we went down to was 32,278 and the close was 32,283. So the price moved up $5 off the absolute low. Fucking amazing. On a $32,000 stock index. So we know probability, if you look at every single time we close a red candle at the lows on a Friday back for the last 100 years or whatever, we know statistically speaking, I'm about to just make up a random number, but it's going to sound like it's true. It's something like 70 or 80% chance that we see continuation on the following Monday. And the reason is the mentality behind it. If we push down to the lows and then we get a little bounce, we get some buying come in and we close a nasty candle, but we're at least partially off the lows, it means, okay, it was a shitty day, it sucks, but people were buying the dip. When this happens, when we close at the absolute lows and we don't see any bounce at all, it literally means we didn't run out of sellers. We ran out of time. And when you run out of time, what happens when the market opens back up? People get right back to fucking selling again. So, and obviously you could look at the futures markets right now and, it's not going to be exciting, obviously, but like in a good way if you're a bull. So at this point in time, we would expect continuation coming through. So if we see continuation in the stock market, we know that crypto trash is going to see continuation and probably Bitcoin breaks to a new low, which means all the shit coins are probably going to break to new lows, with the exception of a couple strong ones, maybe Ethereum or some of the others. Maybe they held on for a little bit longer because of the fundamentals or whatever. But in all reality, what's going to happen? We're going to come back down here and sweep the lows again. And we know that what we've been expecting this whole time is basically we made it down to our key support level. We bounced all the way back up to our key resistance level. We backtested 200 exponential and simple. After we backtest the reversion to the mean, we sell into it and then dump back down. So you guys know we closed out all of our crypto positions, our Bitcoin position at 25,000 to the T. Perfectly nailed it. Got lucky. Close out a bunch of our stock positions. The only one, honestly, right now, or ones that don't look like a genius decision are some of the China stocks. A couple of them actually are like still at the highs. So maybe we made a mistake on one thing. We'll have to see what kind of continuation we get. Still not bullish on China just because of a bunch of reasons. But we had some nice scalps. Closed those positions. Closed a lot of our traditional stock market positions. Obviously took profits on Microsoft, Nvidia. Got stopped out of that trade on Tesla like a fucking idiot. But, that one looks pretty toppy. All that stuff. We talk about all of them a million times. I'm not doing that analysis today. My point is that it seems very likely now that we have basically put in a high, a low, a lower high, a lower low, another lower high. Seems very likely we come back down here and at least threaten the lows. Now, do we have to go lower? No. We could put in a slightly higher low. We could put in a same low double bottom, or we could put in a much lower low. Now, my base case is still that we go lower, obviously. So if we already hit the 236, we already hit the pre-Rona highs on the Dow Jones, the next likely target is going to be the 382. So the 382 on the Dow is going to be 28,300. So that's what we're expecting. That is our next target to the downside, 28,000, whatever I just said. So that's what I'm looking at. That's what I'm expecting. And let's be real, there's an extremely high probability that we get our nut. So we'll see what happens when we get there. Then we can reevaluate, pay attention to it, discuss those key levels, etc. And what is that going to do? We talked about this way in advance back here, how we expected a push down to 200 exponential and 200 simple, and that something actually like really uncommon happened. And there was something we were slightly wrong about right here. I expected us to actually push down and hit the 200 simple. We didn't. We bounced the 200 exponential, which tells me that something is a little bit different, because typically Wall Street uses the 200 simple and sometimes the 200 exponential, but it's a lot less important. So the fact that we bounced the 200 exponential is kind of a big deal right here. It says, hey, maybe Wall Street's starting to wake up and use these exponential moving averages as well. So it makes even more sense that we always use the simple and the exponential. But it seems very likely we come back down here, and now with the move actually up on the 200 simple, now the 200 simple is at 29,628, which actually is where the 200 exponential was. We went down here before. So maybe we do come down here and double bottom, hit the 200 simple, and then that's it, and we move back to the upside. But remember this situation right here, where we talked about, okay, the very common thing to happen is we trick the market into thinking we're about to get the bull cross, and then we just dump on their faces. Distribution, sorry about your luck, bro. And that's exactly what happened right here. This was crossed to the upside. Everybody was bullish. It was going to new all-time highs. And then what happened? Shooting star in your face. Topping candle. The same as we got right here. The same as we got right here. The same as we got right here. And the same as we got right here. So, oh my God, it's crazy. We got a shooting star. And then that was the top. What? What are the chances? Oh. So here we go. 821 have crossed back to the downside. We expect continued selling. At some point in time, maybe a back test, but likely fails. But to tell you the truth, with the continued selling we're expecting, where are we going to start paying attention to? Probably somewhere around 31,500, something like that. But again, I expect us to sweep the lows over the next couple weeks, whatever. Beautiful, beautiful dead cat bounces. We have gotten our nut many times on the recent moves in the market. But the truth is, the counter trend trades, after we do that reversion to the mean counter trend trade, it's basically like, okay, stop trying to make bullish trades. Trade with the fucking trend. Just do the easy shit. And if you don't want to short the markets, or you don't want to use options or whatever, that's completely fine. But, we should at least be neutral or net negative, or at least de-risk at this point in time. I mean, it's crazy not to be. Obviously, none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly, or you'll end up living in a van bound by the river. All right, so anyway, and now we have talked about the monthly chart right here and said basically, well, we expected the back test at the end of the half, at the end of the quarter. We expected the push up here and a rejection, and now what's likely to happen? We're 3 days away from essentially a shooting star on the monthly. So we know what happens when we got the shooting star on the weekly. Here's a shooting star, and it led to capitulation. We saw multiple shooting stars on, the weekly as well. So what's likely to happen right here? If we come back down here and sweep the lows, then not only is it a shooting star, but then, basically at new lows. And then what happens after that? Well, we likely retest the previous high based on closes from the Rona top, which is 28,600, which coincidentally just so happens to be our next target to the downside. Oh my God, it's fucking crazy. Look at all the confluence. What? This TA stuff really works. Oh no, it doesn't, man. It's the magic 8 ball. I don't know. It's probably a combination of all those things. Very bearish chart. Hard sell, left the bullish control zone. Stokes are accelerating to the downside. I mean, bearish as fuck. All red histograms below the slope line. Slope line is red. Bearish as fuck. Very close to the 821, crossing to the downside. The last time that happened, we basically capitulated. That was the Rona dump. The time before that, when it happened, we capitulated. That was 2008. Time before that happened, we capitulated. That was 2000. You guys get the point. When the 821 crosses the downside on the Dow Jones, we get fucked up. And not us, but normal people do. We obviously take advantage of it because, well, TA. If you guys can see it right now, I'm doing spirit fingers. And I'm saying TA. Because it works. Shit works. Just do it. Put in the work. I promise it'll pay off. So Dow Jones, bullish. Very bullish. If you stand on your head and change the colors from green to red and red to green. It is very bullish. SPY, same exact thing, blah, blah, blah. All that stuff that we always say and the same thing. QQQ, blah, 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 same thing. IWN, blah, 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 blah. Russell's garbage. It's trash. Oh, it's trash. So semiconductors, I'm not going to do all the sectors here. We did them on Friday, so there's no real reason to. Semiconductors have crossed 821 back to the upside. Massively bearish engulfing candle, back testing resistance. Maybe we'll push back up here, back test it. What's it going to look like? Head and shoulders, double top, off of the 200 exponential, followed by new cycle lows. We know what happens. We have, the 4 horsemen of the apocalypse. Everybody has their own now, and it's fun to talk about the 4 horsemen and all that. We've been talking about way before other people were. back in biblical days, or not that long, but it's been a while. The four horsemen of the apocalypse for us, and by apocalypse, I mean literally before massive capitulations like the Rona dump, like the 2008.com, or I'm sorry, 2000.com bubble burst, the 2008 global financial crisis, housing crisis. Every time those happen, the same thing happened on four particular assets. The yield curve inverted. Sure, we already had that. Perfect. Semiconductors put in a macro peak, blow off top. Uh-oh. Sure looks like that to me. Transportation sector, blow off top, macro peak. Uh-oh. Hang on here. I mean, what's the fourth one then? Are we in trouble? We are, because oil went up at least 50%, in a single year, and essentially had a blow off top. So at this point in time, it seems very, very likely that we're going into one of those crashes again. So, it is what it is. Get ready for it. Or you can just freeze up like a deer in the headlights. That's fine too. A lot of people are doing that. A lot of people have done that. And I know what people are saying now. They're saying, oh shit, it's too late now. It's too late to sell because I'm down. I was up and now I'm down. Or I was up and now I'm not up as much. And, I don't care what you do. You don't have to sell. You don't have to buy. But just make sure that you understand what the repercussions are either way. Maybe you sell out and then you have to buy back in higher, but you can at least buy into strength. Maybe you don't sell out and you just freeze up and you're just like, well, I'm a hodler and I have a 20-year time horizon. So I'm okay with going sideways or down for 20 years, as long as 20 years from now we're at higher prices, which that is completely fine as long as you understand the risk. As long as you understand the risk. And then obviously there's the possibility that, we just full on capitulate and you buy substantially lower. And instead of retiring with, $10 million, you retire with $100 million, which, it's good. It's okay. It's not bad. So DXY obviously is headed towards zero as everyone predicted. It has once again peaked again. Oh, never mind. Nope. Just put in a new high. Damn. So I guess all the people calling for the dollar once again looking like fucking retards. Looking like ducking feetards. In case your kids are watching. With obviously this is not a kid friendly show. Okay. If you're letting your kids watch this stuff and they're not grown, look, we need to have a serious talk. Okay. I'm not going to say you're a bad parent, but probably don't let your kids watch my content, please. For their own good. For their own good. So what do we got going on here with the DXY? I mean, it sure looks like we're headed up to 120. Sure looks like it to me. Now, granted, though, we have been saying that since, we were at like 76. And then we were saying it again at like 92. And then obviously, we called the double bottom perfectly about 90 right here. So are we flipping script? Are we changing our mind now that it's bullish? Well, no, we were ahead of it the whole time, but everybody else will soon. Soon everybody else will be calling for strength of the dollar and all this. And obviously, as the Federal Reserve keeps hiking rates and they go higher and higher and higher, there's more incentive to the whole period, the whole tightening period. We saw basically everybody's going further and further out the risk curve because you're getting paid nothing for a bond. You're getting pathetic rates. So people invest in stocks and they chase more and more yield in riskier and riskier places. So as the yield goes up, the risk-free return rate goes up. People, the opposite happens. They tighten up the yield curve. They go, oh, okay, we probably topped out. So now I don't want a bunch of extra money in Cathie Wood stocks. I want it in Apple and Microsoft and utilities and, staples, like important safer things. And it's the same way with the bond market. Everybody calling for like this massive like rally in the bond market. Sure, maybe over time, people will want bonds again because the yield is high. But the actual trading of like TLT, the bonds that are already out there that people locked in at 2% are going to go trend towards zero because the higher the yield is on new bonds, the less people want the old shit that's paying 2%. If I tell you right now, hey, you can buy a fresh new bond, straight from the treasury and you'll get 10% yield on it. You'll be like, fuck yeah, that's awesome. And like borderline risk-free, A rating, that's pretty fucking good. 10%, that's historically awesome. And then I'm like, or you could buy this old bond on the secondary market and you get 2% on it. You want that one? And you're like, obviously fucking not. Why would I want 2% when I get 10%? So what is that going to do to the bond prices? It drives them lower. They go to trash because nobody wants them because they don't yield as much as the new bonds. So just keep that in mind when we're talking about like actual bond prices, like new issuance versus secondary market versus like speculating on, you know, basically like paper trading, like bonds, etc. It's very important to pay attention to the big picture and not just buy into some bullshit narrative. That's why thinking outside the box, free thought, is so important right now with everything going on. Because everybody's just saying the same thing because it worked for 40 years. But it's not working now and they can't figure out why. And just like Michael the failure, they can't pivot. The only thing that makes Michael pivot is he gets hit by Elon's asteroid, you know, and then his little like ghost floats up and he goes, well, I guess I was wrong about that Bitcoin thing. Maybe I should reevaluate my decisions. And then all of a sudden, like, you know, the spirit that's floating up, like, gets dragged down into the depths of hell because he's a trash bag piece of shit, charlatan scumbag. You know, if you believe in God and asteroids and Elon Musk and all that stuff. We could just be in a simulation. According to Elon, that's actually probably the truth. So in a simulation, does that make him more or less likely to hit Sailor with the asteroid? I would say more, actually. So I'm going to have to agree with Elon on this one. And then it further strengthens my base case of the asteroid scenario. So, and you know what would really be the icing on the fucking cake? Is if the asteroid is made out of gold. If Elon shoots an asteroid out of space that's made out of gold and it hits Michael Saylor and kills him, and then actually gold prices crash too because the supply of gold goes through the roof because we have a golden asteroid. Wow. That actually is my base case now. So that's my new base case. So yeah, all right. Getting pretty ridiculous here on the stream, but I mean, I think we're making our point here that even if something's not likely to happen, it's worth at least considering. All right, so the Apple short is obviously going nicely. So we had the stop loss if it goes higher. We have the targets if it goes lower. And then, you know, there was obviously a dildo party taking place here. Now, you know, is it going to bounce to 200 simple? Is it going to bounce to 200 exponential? Are they going to come back in and buy back stock before the 1% kicks in? Is Warren Buffett going to double down? Sure, all those things happen. Is our target still down here, 140? And then obviously we got the big party down here at like 115. So we're talking about, you know, I mean, you're not going to get rich shorting Apple, and it's definitely dangerous, but 17.5% downside or 31% downside. Risk reward ratio on these was 8. And, oh wait, no, it wasn't. Oh yeah, you know what? The risk reward ratio is, I'm too lazy to actually switch these to the correct tool. Jesus. You would think that the color, the green and the red, would clue me in. Someone who has used TradingView for quite some time. And yet, here we are. All right, so let's move that one over. So now we're using the correct tool, the correct way. And it actually makes sense. And I do apologize for my laziness, not switching that out when I noticed it was wrong. But you guys get the point. So yeah, that's how you're correctly supposed to use the tool. Shows that, you know, you're making money and not taking horrible trade setups. So anyway, it was a 3.3 to 1 risk reward ratio and 6 to 1 risk reward ratio. Obviously, you know, borderline bull market still because we're above the 200 exponential and simple, but we know once the 200 simple crosses above that we're showing signs of exhaustion, and the fact that we're putting in another lower high tells us we're likely breaking down here to at least retest the lows, if not go down to new lows. So, you know, so it's like a coin toss type trade here, but in hindsight, obviously it looks fucking obvious. But, you know, that's the beauty of putting these videos out in advance. Then we look like motherfucking geniuses. So Microsoft, obviously beautiful trade, played out well. Could have stayed in this one, got a little meat off the bone, but 15% to the upside, beautiful. Could you have entered a short back down here? Yeah, I have a weird thing where if I'm in a long and then we hit my target, I don't like to just immediately short again. I just like to let the chart do its thing for a bit. So typically when I close one trade, I don't immediately like open an opposite trade in it. I don't know if it just seems like super cocky or arrogant or what, and that's why I don't do it. And I know what you're thinking. You're like, you're pretty cocky and also very arrogant. So it seems like it would be right up your style. For whatever reason, I like to just take a break and bask in my ambiance. So would a short have probably been a good trade? Of course. But it is what it is. So likely to retest the 382, possibly a 0.5. Microsoft looking pretty rough right here. Again, lower high, confirming into a bear market. Google, same thing, trash. It's been playing like trash. Came all the way back down to the bottom of the channel. You guys know when we're in a channel that we buy support, sell resistance. Now, here we are at the bottom of the channel. So should we be buying support right here? Here's the thing. There's always an exception to the rule. But before you can start making exceptions, you have to know the fucking rules. So in this case, the exception is that everything else looks like trash and looks like it's going to break down lower. Now, in hindsight, if Google just bounces from here and just shoots back up and puts in, a new high at 122, we're going to be like, damn, we should have just trusted the system. But because we are, chart masters, it's okay for us to essentially make executive decisions at some times. So for me, the executive decision is, if I'm expecting continuation on the markets to sell off because we literally close at the lows and we're at support, it looks very, very high likelihood that we break down from here. So if we take our measure move potential breakdown and we say, okay, this is probably going to be the breakdown. Here we had a little fake out, a little spring, a little failed breakdown, whatever. This one likely is the one that plays out just because of the shit that I just said. So likely takes us to like $100. So we'll get back down to $100. We hit our target. We fell short of it like a buck right here. Obviously, this was pre-split and everything. So it was the equivalence of 2,000 at the time. Likely hit the 382. We were already so close to it before. In all reality, confirming into a bear market, the probability of us going, from a lower high to a new lower low, very, very high. And then in all reality, where do we probably go? Well, we have our flag pole right here from the peak to the, bottom right there. And then, likely, depending if we take it from the top right here or if we take it from the breakdown, could go either way. I prefer to take it from the breakdown, but, arguably you could take it from the top. The main argument difference being is that, you have this little chop up here that's not accounted for when we take this level of the measure move. We take the flag pole versus like the actual flag itself. So again, we do it either way. Sometimes I talk shit about how other people do things because it's fun, and also I'm a hater, so it is what it is. But realistically, where does it likely take us to? Probably the 0.5 and then the 618. We know Slinky theory tells us we're not just going to go straight down. We're likely going to go A, B, chop down, bounce up, chop down, bounce up, and backtest resistance support along the way. But $78 seems likely on Google over time. Probably going to be able to take a nice scalp at about 88, depending on how disgusting like the economy and the markets and whatever get. So Tesla, aka the golden meteor god. What's going to happen right here? We just got the split, obviously. So we split to 300. It was 900 at the time, went to 300. Now it's 288. That was basically, let's be real, okay? Elon Musk is the master manipulator, okay? He's the fucking man, all right? He's great at manipulating everyone. Government, his cult members, people in general. You don't have to like Elon. You don't have to love Elon. You don't have to believe in Tesla or anything else that Elon does. But he's the richest man alive for a reason. He's the master fucking manipulator, okay? So if you don't think that this stock split was him trying to manipulate the price up one more time so that he could bust nuts in, his cult's butts, you're crazy. Okay, because I guarantee he's going to come out and he's going to be like, oh, I know I said I wasn't going to sell any more stock when we were here, and I know I did sell the absolute top right here and probably again here, and, I know I said I wasn't going to sell any more, but, I have to fund the golden asteroid, reclamation project, so I did have to sell some more Tesla and dump on your guys' heads. So for that, I apologize, but you just wait, because eventually you're going to understand why I did it. And when that golden asteroid hits, you're going to be glad it did. Or something like that. I don't know what his excuse will be. He'll be like, if you calculate the square root of 420 and then you add 69 and divide that by the amount of, days in a leap year, it comes out to the reason that I just sold Tesla stock. I don't know what it's going to be, but it's going to be some bullshit, whatever. Who cares? Regardless, we likely go to new lows. We bounced to 236 perfectly. We know Elon manipulates his chart to the next level because he sold the exact 1.618 from the bottom to the top. He busted nuts. He literally topped out his own stock perfectly at the 1.618. He's the smartest man alive. So not crazy, or richest man alive. Not crazy to think that he might have some analysts working for him, or maybe he's just an amazing analyst himself. I don't know. But likely we're headed back down here to 180 or the macro 382. We have the green and the blue, the same way we have the Bitcoin low, and we have the, this is like the equivalence of like our $3,000. This is like our Black Swan event Rona low equivalents. Like, we don't know, are all of the bots and algos, the market makers, the master manipulators, are they using this peak right here or trough or this one right here? We don't know for sure. We know so far they're clearly using the green one. We know that for sure because we see a bunch of confluence at that level. Now, when we get down here and we hit the blue one, if we don't see any kind of reaction, we say, okay, nobody's using that. But the fact that we have this reaction back here before we put in the peak tells me there's a high probability that we will see at least some sort of reaction then. And then along the way, we'll probably march down and just kind of oscillate between both those levels. So which one matters? Well, right now, obviously this one. But I suspect when we get down to 178, that's going to be huge. So now you're like, it'll never go to 178. You just hate Tesla because you like diesel trucks and burning gasoline, you fucking asshole. To which I would say, correct. I do like diesel trucks, big turbochargers, and polluting the environment. Okay, I do like all those things. So I agree. But also, Tesla probably going to $179. All right, and NVIDIA. So beautiful trade on NVIDIA. Front ran that just slightly here. Could have got a little greedy with it, honestly, and expected it to come all the way up to 200 simple, and we would have missed our exit. Instead, you know, I like to take profits early and just lock in those gains, which obviously in hindsight was genius. Now, if you didn't do it right here and then we shot back up, you had a second chance. So if you didn't do it right there, I mean, you're not disciplined or you're too greedy. I mean, let's be real here. Or maybe you didn't even take this trade at all. And you were like, fuck, I can't believe I didn't take that trade. What a dumbass. In which case I would say, oh, well, as long as you had a legitimate reason why you didn't, that's fine. But also, you probably do feel like dumbass. So 382, we already tagged that perfectly. Next target's 0.5. So NVIDIA going to $104. Yeah, buddy. Jim Cramer is going to have to, you know, dispose of his dog if we hit $104. He's going to have to get a new dog, which will name Dogecoin or something like that, I'm sure. Amazon holding up okay. Broke down from that key level. We have this gap right here. There's a little bit of support right there at the W breakout, but let's be real. It looks like we're about to close this gap on Monday. Expect Amazon. It's probably in pre-market right now at $121.81. If it's not, it's probably going there. And then after that, new lows, and then after that, even new lower lows. Meta, it's looking strong. Looking very, very strong here. Very, very strong. Ascending broadening wedge. Complete meltdown, trash company, run by lizard people, bounce back up here, breakdown from the descending broadening wedge, looking like trash, back down here at the 786. So, I mean, this is like the worst thing ever. This is like 2018 low. The 2018 low is $122, and we're already at the 786. So you guys know this is our last chance for a reversal. Is Meta going to all of a sudden reverse, or is it going to just continue to melt down like the trash company of garbage uselessness that it is? Obviously, yes. You know, so the target is that low again. So it's going to be at the lows from 2018, which means, let's just say you were like a savvy investor and you're like, you know, this Meta stock might be the future. I kind of like this thing. So you decided that, you know, anytime in the last, and keep in mind, I'm biased because I hate Meta and I always talk shit about it. So I'm going to be extra mean here. So if you like Meta or you're a beta male Metro or whatever, and this is going to hurt your feelings, please cover your ears for a moment and just pretend like there's not a giant red block of losers on your screen. So in this hypothetical situation, which is probably about to happen, if you bought Meta anytime between May of 2016 and today, you're a loser. You're negative in your position or about to be very, very soon. There's still a tiny little area right here and right here where you don't have to be a loser, but you're probably going to be very soon. So basically, Meta is such trash and just burning through money trying to create, you know, some bullshit metaverse where, you know, all these like creepy lizard pedos can all hang out together or whatever the fuck they're going to do there. 2016 lows. So get ready to just get wiped out. And then at that point in time, you know, this thing starts looking like Twitter. Not quite as bad. You know, still got a way to go before it's like full on Twitter, like no one's ever made money in this thing, but looking pretty bad. And then when we look at the macro life cycle of this, what is that target to downside? What is this complete wipeout of all wealth ever created in Meta in the last 6 years? It's the 382. So the next target after that's 0.5. So then we go to the $82. And then instead of just being a loser, if you bought in 2016, you're a loser if you bought in 2014. And then if we go lower than that, you're a loser if you bought in 2013. And then if we go lower than that, you're just a loser if you bought this ever. And keep in mind, this is in major indexes too. So just imagine if, for instance, you were using the strategy that I discussed multiple times, but specifically in our last live stream, where essentially you bought, say, like the S&P or the NASDAQ, and then you shorted the trashiest shit in it, say, for instance, Meta, how much better you would be doing than the regular market. Because even though, obviously it's weighted by market cap or whatever, but I mean, at this point in time, Meta's down 59%. We look at something like the Dow, we'll just flip over here, or let's just look at Apple. Apple's another, obviously, like key stock that is in all of these major indices. Which one would you rather be down? 10% from the all-time highs or 59%? And I know what you're thinking. Well, sure, you pick the best stock and, the worst stock, to which case I would say, I agree, Meta is the worst stock, and also Apple is doing pretty good. So maybe not apples to apples. Fuck. Damn it. Please with the dad jokes, man. Come on. Fuck out of here with that shit. All right, what time are we at right here? 2 hours and 10 minutes. Looking good. Okay, let me jump in the chat. We're just about done, actually. I didn't get a ton of requests for today. I also waited till like 4 minutes before the stream to ask for them. So, all right. So, is it time to buy? I'm just gonna ignore that question. What about DXY? What about DXY, bro? I don't know when you posted that, but we looked at DXY, so I mean, if you still have a question, whatever your name is, ALP, Goxy. I don't know if that's a name or what, but if that was your question still, just go back and watch the part where we talk about DXY. All right, so gold, again, straight up looks like trash here, getting ready to just melt down. And we know, does gold perform well when the DXY is strong? No. Does gold perform well when yields are rising? No. So if yields are rising, if DXY is strong, what does that say for gold? Well, we're probably going to keep going lower. Okay, well, what if we go any lower? The lowest low we've had so far this cycle is 1680. And that has acted as support quite a few times. So we're at 1720 now. So we're $40 away from a new cycle low. And we know if we break down from this level, we're just going to go one more time to this chart again. It's very important. Now, there's something I want to mention about gold, okay? I do talk a lot of shit about gold because the chart looks like complete trash and garbage, and it looks like it's about to melt down. Now, this is the gold to dollar chart, okay? Let's use an extreme here. Let's say you live in Turkey, okay? Maybe buying gold is not a bad idea for you if you live in Turkey because you don't have access to dollars or whatever else. Maybe you live in Europe and the Europe gold chart, Euro chart is going to look different than this. So there's still factors for where you're located, what your, how you make your money. If you make your money in Turkish liras versus if you make your money in dollars, that could completely change what we're looking at right here. Now, if you're in the United States or you are getting paid or you have dollar denominated debt or whatever, this is much more relevant to you. But obviously, I would like to think that you guys have learned enough that you could extrapolate that to your currency. And if not, you can just request it and I'll look at it. But anyway, the monthly gold chart, we pointed this out. And I pointed out a bunch of times. And I know it's super redundant and it's annoying when I just talk about the same stuff all the time. But there's an important reason here. Back test, blue slope line, rejection, 821 cross the downside, full on capitulation, not just price capitulation, because we went down 35%, but also time capitulation, because if you ate that drop, you didn't get back to even for 2,527 days. So if you're okay with your position going down 36% and 2,527 days of sideways before you get back break even, don't worry about what we're looking at right here. But if those things, if 2,527 days seems like a lot to be upside down in a position when you have limited capital, or you don't want to potentially lose 36% of your money, maybe don't just freeze up in the headlights like a deer and get hit by the semi-truck. Because it looks like, and again, I could be completely wrong. And you're like, the fundamentals say that gold's going to be amazing and the central banks are buying up all the gold. And you're just a stupid person that doesn't even have 1,000 subscribers. And there's only 11 people on the whole internet watching you right now. So who gives a shit about what you say? To which I would say, touche. That was a little harsh, but fair enough. Fair enough. But it's undeniable that this chart looks like shit. So get ready. new low on the monthly. If we close the monthly below $1,706, we have a new low. So we have a high on the monthly, we have a low on the monthly, we have a lower high on the monthly based on closes, and then we will potentially have a lower low on the monthly based on closes. And we know that, once we take out the low, it's, party time. Big red party time. Not the good kind. So, where would the target be? Somewhere around 1,300 back test. Do we have to get there? Blah, 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 blah. Same things we always say. No, but I like my odds. Silver, gold. Oh, whoops. Sorry, hang on. I was like, whoa, silver looks pretty good. Nope, that's not silver. Silver, I'm like, what happened? Am I on the wrong time frame? No, the wrong chart, my friend. Silver, $18.60. We know the cycle low on silver was $18.16. We know that the silver backs are covered in poop, crying right now, and their back ends hurt because they have gotten fucked by reality, and not in a good way. So all of the silver cultists, I know that your life probably sucks right now, but there are like hotline numbers you can call. It's not worth self-termination or anything. So stay positive, and also just learn from your mistakes. Don't join cults, and also don't try to buy the worst performing asset in the last 50 years because you're like, well, it's inexpensive. It's the only thing that's not making new all-time highs, so it's a bargain. Well, maybe it's on sale because it is garbage. I mean, and again, you guys know I love silver, but the chart looks bad. Okay, I'm not going to use a metaphor right here because what came to mind was a little bit gross, honestly, even for me. So we have a giant cup and handle. There's definitely a possibility that one day we get up here to $46 or $50 and we break out and go to new all-time highs. But I mean, in the meantime, it looks like shit. It looks like a steaming, hot pile of excrement. Now it is at the 200 simple and 200 exponential, so maybe it finds support here, but it did hit the measure move breakdown, so maybe it finds support here, but I don't know. I find it hard to believe that gold is going to break down from the range it's been trading in for multiple years since that all-time high from the run-up when everybody was afraid of inflation and the end of the world, and then gold's going to suddenly break down, and then silver's just going to like hang tight or go back to the upside. So if we're at the macro from the all-time high to the low, or from the low to the all-time high, it doesn't matter which way you draw it. It just kind of changes the number slightly. If we're at the 618 right now, or the 382, depending on how you drew it, the next target to downside is the 0.5. So silver going to $12.86. Well, the guys who sell you silver are going to say no, that I'm stupid and it will never happen. But the guy who doesn't give a shit about selling you anything, that uses technical analysis and just happens to get lucky a lot, says that probably silver goes sub $13. So when it was $30, we were calling for 20. When it was 30, we were calling for teens. When it was teens at 18, we're calling for $12, $13. And I know what you're thinking. You're like, you'll never be able to buy silver for $13, moron. Sure, okay. Companies might charge you more than that over spot or whatever. There's an easy way to arb the difference, okay? If silver breaks down to $13, but you try to go buy silver at a pawn shop or buy it, online from a dealer, a silver drug dealer, maybe they don't want to sell it to you for $13. Maybe it's $13 and they're charging you a $7 premium because they paid $20 for it and they're a businessman, so they don't want to take a loss. Makes sense to me. So you have to pay $20 from it for them. And you're like, well, that doesn't help me because we just broke down from $18. So then it has to go all the way back up to 20 just to get back to break even because I overpaid for it. So what you do is you buy like digital silver, fake silver, you paper trade, like, contracts or however you want to do it. There's a million other ways you can trade silver without physically buying silver if you're looking to actually trade it, or if you want to like hedge a physical silver position, etc. So you can buy digital silver, let's say, at $13, and then, if it runs back up or eventually goes back into a bull market or whatever and gets back to 20, you haven't paid that ridiculous premium. And then when you sell that position and close it out, theoretically, maybe the premiums are back more reasonable, or you're in a bull market, so you're less concerned about premiums. And then you can just go out and buy physical silver and then pay the premiums. But you don't have to pay some, if let's say, for instance, it breaks down to $13 and then these scumbag silver dealers are selling it at a $7 premium because they don't want to take a loss because they're trying to speculate on something when they should just be arbing the difference, which is what their job is, not to be a speculator. So let's just say it goes to $13 and the premium is $7. If you buy it at $13 but don't pay the premium, and then it goes back up over here, you're talking about the difference between a $7 premium on, let's just say for easy sake, $14 silver. You're paying a 50% premium over the price of silver. So then if it moves back up here, even if the ARB trade, even if the $7 premium sticks, it's still $7, which is not likely to be over a long enough time frame. It's likely to return to like a more standard, like $4, $3. I mean, I bought silver when premiums were like 75 cents. So $7 premiums, $10 premiums, $15 premiums on Eagles is fucking retarded. But that being said, when people are scared, they'll pay crazy prices. So if it moves back up to like 18 or something like that, and then the premium is still $7, the percentage of the price, let's say 21, let's say it goes back up to 21 just for simplicity's sake, and then the premium is still $7. You're now paying a 33% premium in addition to the price, as opposed to down here, you would be paying a 50% premium in addition to the price. So that's a way that you can play this without getting absolutely raked over the coals by the silver drug dealers. All right. Write that one down, because that is a useful way to play precious metals. So gold silver ratio, obviously at highs. I mean, sure looks like gold is about to go parabolic compared to silver again. I mean, now does it go on one of these runs right here, massive, and then followed by a blow off top, and it takes 129 silvers to equal 1 gold? Probably. We'll see. I mean, it looks pretty damn bullish to me. So if you were like, hey, I want to buy into gold or silver right now, but silver is super undervalued according to, somebody on the internet. So should I buy silver? I would say no, because gold has all the momentum. So you should buy gold, because it looks like gold is going to get more valuable compared to silver. And then later on, when it's way up here and it looks kind of tired and it's not going into a parabolic bull run, then you can trade off your silver, or your gold rather, and then you can buy silver on the way down or whatever, or then you can sell it at the lows, etc. But when we're in a bull trend on gold silver ratio, you want gold. When we're in a bear trend on gold silver ratio, you want silver. So right now, if the momentum continues to the upside, you want gold. GSG commodity index bounced off 200 exponential and simple. Took out this high right here, back testing it right now. It would have been better if it held above here. It didn't, obviously. The 821.5 crossed to the upside. There is still potential for further upside, obviously, based on the breakout, based on the potential trade setup. We almost made it to 0.5, not quite. The 618 is slightly higher. Are we going to then put in a lower high and go lower and put in a lower low? Probably. But for now, this still looks a lot better than just about anything. So right now, commodities and energy are still holding up pretty good compared to just about everything else. All right, so we got a request right here. Obviously, when we're doing like requests and stuff like that, just assume that this is trash and going to zero, and that I would never buy any of this stuff ever. And then if it's not the case, I'll tell you. So Supercom Limited, SPCB, clearly in a bear market, completely just melting down. Let's go to a longer time frame and see what's going on here. So we have a all-time low back here. We have a, look, this thing has literally just been melting down since 2004. So this is trending towards zero. So the longer you hold this for, the closer to zero it gets, based on history. So when we bounce up here and put in this lower high, that basically tells us, okay, I know what you're thinking. This is trash and we definitely don't want this. And I agree. So do you just get the hell out right now, or do you try to get a better exit? I mean, the truth is harsh, because you got greedy. We had a push back up here. That was your chance to basically get out, like in this specific case for this question, at break even. The mistake has already been made. So it doesn't matter what could have happened. It doesn't matter what should have happened. What matters now is, do you cut your losses and get the hell out right now before it goes lower? Or do you wait for a pop back up and try to get out at break even or closer to it? So that's the two scenarios we're looking at right now. But we know that we don't want to be holding this thing on a long time frame because it's trash. Now, it did kind of bounce around the heartline, or it's around the heartline now. So maybe there's an argument we come up here. I wouldn't get too excited for a chance to get out at a better position. I would basically be looking at something like this. you're probably nearing the bottom of the range in the channel, inside the channel. You're probably near the bottom of the range. So the question is, can you stomach this back down to 18 cents at that support? Or, you know, do you just get out now and just not take your chances? Because that's another, like, it's almost 50%. It's like 40% down from here. Now, if you can stomach it, or if we do bounce right now, could you get a better exit around like 66 cents and double what you're at now and actually exit this trade like break even or even in profit? Yes. So the question is, what's the risk to holding from where you're at now? Because it doesn't matter if you're upside down in the position now. What matters is, you know, what's going to happen going into the future and how you can use that to your advantage. So if you were just going to, if you were just going to sell right now, take the L, you know, and then it bounces up, you're probably going to be pissed. So let's look at it as if we don't have a position in this whatsoever, which we don't, nor will we. But let's just say, hypothetically, we're just looking at this for a potential trade setup to see how the risk reward looks. So just say, like, you know, tomorrow this is going to open back up and we have to decide, are we taking a position here or not? Well, we know the stop loss would be below the heart line and the bottom of the channel. That's like 43% downside risk. And then we know the target to the upside would be basically back testing the top of the channel, 156% upside risk or reward. So it's 3.6 to 1. You risk 40%, your reward is 156%. So do you sell now to avoid the potential 40%? Or, you know, and then hope for that? Well, alternatively, you know, the worst case scenario, or not worst case, but the less good scenario, is that it actually just bounces up like 30%, backtest the heart line, and then you can get out. But that basically already happened. That's essentially what already happened. So in my opinion, you got to make your own decision. Obviously can't tell you one way or the other. We're at the bottom of the range, just melting down. The longer you hold it for, the closer it's going to get to zero. If we look at the shorter time frames, the weekly, you know, there was a case here that it's trying to push up, and that's basically what happened, and then people just dumped into it. So what about on the daily? Again, you know, that was your reversion to the mean. That was your chance to get out. Probably got a little greedy on this. Didn't take it. So are you going to get another chance? Probably not. Again, you got to make your own decision on this one, but the longer you hold this for, the closer it gets to zero. So keep that in mind. CBT, Cabot Corporation. So we moved to the upside here. We're still holding the ascending trend line for now. We're back testing that peak right there. Let me zoom out and go to a longer time frame on the monthly. So essentially, we were looking at from the bottom to the top. We came up to the top. We had a nice little retrace. Didn't quite get to the 236, which was obviously our initial target. And then after that, we talked about the potential 382. And then what happened? We pushed back up here again. So the real question is, okay, how do we look at this? Well, we're getting a buy signal at the top of the range. Those are the worst kind of buy signals. Doesn't mean we don't get further upside, but definitely not good. Not the good kind anyway. It's better if they're at the bottom of the range, obviously. So the real question is, what's going to happen with this monthly candle? If the monthly candle closes a new monthly all-time high, it's going to look pretty good. So a close above $76, a blue sky breakout, likely continuation. If it doesn't close a new all-time high, you know, we essentially have a high, then a low, then a lower high. So then we probably get the move to the 236. So what is the risk reward here? I mean, basically, well, you're at the top of the range. So the downside is 24%. That's your risk. And the upside to just buying right now versus buying the blue sky breakout or a new, you know, all-time high close on a monthly is 2%. So if you risk 2% by not just FOMOing in right now, or by selling your position right now, or however you want to look at it, you know, again, we can just measure these out. The risk to the downside is like 25%. The reward to the upside, and again, the way you have to look at this reward to the upside is basically saying, hey, if I just buy right now because I'm 100% sure this is going higher, or I believe based on a dream I had, or a magical unicorn, you know, came to me on my lunch break and said, this is going to new all-time highs, whatever your reason is, you know, you're 1% away from confirming a new monthly all-time high, or you're 25%, 24% away if we don't confirm a new all-time high and we go lower. So what would I do in this scenario? Easy. You just wait. Wait 2 days and 18 hours. If we put in a new monthly all-time high, blue sky breakout, much more likelihood of continuation to the upside. Or you get Bitcoined on. And then downside, obviously, is we don't put in a new all-time high, and we likely hit the 236 and $56. So that's a pretty easy one, actually. Pretty easy decision right there. 24% or 1%, which would you rather have? And then obviously we have our peak here on the weekly, came down, put in a low, and then we came up and put in a slightly lower high. So it seems likely that we would break down here and come down and put in a new low. Obviously, losing this kind of sloppy ascending support, depending on what time frame you draw it in, would matter. Obviously, looking at a couple different time frames give us a better idea if we can kind of make it a channel or just an ascending support line. But essentially, closing below the 8 on a weekly, closing below the ascending support in white, we likely retest the 21. If we do that, we probably back test the breakdown and then go down here to our low, which is that 24% downside. So the truth is, the best play probably right now on this is to short it. Oops. Went the wrong way. And again, on the daily, so we have our high right here, we have our low, and then we came up and put in, based on wicks, it's a lower high. Based on closes, it's basically the same high, or even arguably slightly higher high. Obviously, we trust longer time frames more. We've got some bearish divergence here. We have obviously the peak. Well, depending on how you look at it. If you go by, technically it should go by closes. So it is technically bearish divergence. So you got some bearish divergence. Got a hard sell signal. Leaving the bullish control zone. A push up here. Probably liquidity grab from somebody that's dumping on people's faces. Getting ready for the big dump. So in all reality, we should be shorting this thing. And, you know, maybe it stops right here at sport at $66. Maybe it comes back down to the new low at $56. Maybe it goes substantially lower. Longer time frames, even on shorter time frames, this actually looks okay. It's in a bull market. It's in a bull trend, threatening all-time highs. So it's a lot better place to be than most things are. But right now it doesn't look particularly good. Only because, you know, when you have 24% potential downside risk or 1% potential upside risk, you know, it's 24-to-1 risk-reward ratio. So, you know, that's an easy trade. If you flip a coin and I pay you $24 if you call it right, and you pay me $1 if you call it wrong, how many times do you want to flip that coin? None? 1 time? 10 times? Infinite amount of times? Yeah, I would take that flip as many times as I can. So for me, easy play is to short this. Or, you know, whatever. And then 1% from now, or even if you want to be like super conservative and you're like, well, let's just push up this stop loss just slightly higher. We'll go 4%. So 24% downside, 4%, you know, upside. You know, what that give you? Of course, I don't know how to use the tools correctly. Or maybe I'm colorblind. Possibly my brain is malfunctioning. I don't know. But, what is it? 24 and 4. So 6-to-1 risk-reward ratio. So there's 6 times the reward to the downside as there is risk to the upside. So another easy decision. Very, very easy decision on this one. All right, we did it. We made it to the end. Fuck yeah. Oh, yeah, yeah, everybody. Yay, hooray. What's going to happen tomorrow? Probably a bloodbath. All right, so I guess we'll go ahead and wrap it up there. Hopefully you guys enjoyed the stream today and all that good stuff. Crypto Trend Hater in full effect. It is 10:35 p.m. Eastern Standard Time on August 28th, 2022. And like always, I'd like to remind you, it's not financial advice. I'm not your financial advisor. The markets are extremely volatile. Please do your own research and trade responsibly. If you're just like, wow, this guy is so fucking funny and he's amazing at technical analysis, and I just wish there was a way that I could have direct contact with him and hang out with a bunch of awesome fucking people in like a private group, you know, and do stuff and things, and also have access to super cool indicators and lots and lots of GIFs and memes and stuff, you can hit me up and join the group. It's a paid group, obviously. One-time fee. Pretty fucking reasonable if you ask me. It's not even really a fee. It's really you just showing your support for all the contributions. For all the people that are in the group that have shown their support, I appreciate you guys make all these streams possible. For all the people that just come here and get the free info, mad respect for you as well. Glad you are educating yourself. If you ever decide to take that plunge, you can reach out to me via email yeah, all that good stuff. So that's it for tonight. Everybody have a wonderful evening. Hopefully you enjoyed the weekend. Obviously, bloodbath in full effect right now. We'll see how everything goes tomorrow. But, you know, obviously base case is likely downside continuation because we did close literally at the lows on Friday. So, all right, everybody have a great night. Appreciate you guys all tuning in. Make sure you smash up the like button before you go. If you're not already subscribed to the channel, you're probably not going to subscribe anyway, if you're not convinced at this point in time. If you like when I use swear words, make ridiculous comparisons, and also just talk up my ego, you know, there's definitely going to be more of that in the future. So you're definitely in the right place. If you don't, you're probably already gone right now, so fuck you. That's it for tonight. Everybody have a great evening. Crypto trend hater, and I'm out of here.